Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning. My name is Fatma Saleh. I am a training advisor for Abrar Consult. Abrar Consult is a well-known firm in East Africa region. For the benefit of those who hear Abrar Consult for the first time, Abrar Consult is a training and consultancy firm based in Nairobi, Kenya, and Dar es Salaam, Tanzania. Abrar Consult provides training and advisory on Islamic finance, halal business management, management and leadership, and so much more. For more details, we urge you to visit our website as www.abrarconsult.co.ke. Ladies and gentlemen, it is my honor to introduce Mr. Khalfan Abdallah before inviting him to give a welcoming remarks. Mr. Khalfan Abdallah is a co-founder of Abrar Consult, a consultant on Islamic finance service provider and Sharia board member of some Islamic financial institutions in Kenya and Tanzania. He is also a professional trainer in his areas of expertise, such as Islamic finance, halal business management, entrepreneurship, leadership and management, among others. Previously, Mr. Khalfan Abdallah worked with KCB Bank, Amana Bank, and Gulf African Bank. In 2015, he was recognized as among the global leaders in Islamic economy by Islamica 500. He has appeared in various radio and television channels to discuss some financial topics such as DW Swahili, BBC Swahili, K24, Y254, Horizon TV, Channel 10, Iman TV, and among others. I would like to welcome Mr. Khalfan.
Thank you, Fatima. Assalamu alaikum wa rahmatullahi wa barakatuh. I hope I'm audible. Alhamdulillah. Assalatu wassalamu ala rasulillah wa ala alihi wa ashabihi amma ba'd. Dear beloved participants, Assalamu alaikum wa rahmatullahi wa barakatuh. First and foremost, after praising Allah subhanahu wa ta'ala, and may peace and blessings be to our beloved messengers, I'm very happy to officially welcome all of you to our second East African Islamic Banking Virtual Forum. Special gratitude to our highly esteemed speakers who shall be presenting to us different topics. These speakers are joining us from different parts of the globe, from the Kingdom of Saudi Arabia, Turkey, Malaysia, United States of America, Oman, Kenya, and Uganda. We are grateful for them accepting our invitation to share with us on different topics. East African Islamic Banking Virtual Forum started in 2020 amid the COVID-19 crisis. Since then, a lot has happened in the Islamic finance in East Africa and globally. I urge you, our beloved participants, to listen attentively, learn, and internalize words of wisdom that shall be delivered by our distinguished speakers. This year's forum has a set of objectives, such as to provide a high-level update on latest development in Islamic banking and finance in our region, in East Africa, to provide theoretical and practical understanding of Islamic banking and finance, to recognize the role of financial technology in Islamic banking and finance, to understand crypto assets and its impacts, also to appreciate and recognize the role of human capital development in Islamic banking and finance. Last, to position East Africa as an emerging destination for Islamic finance investment in our region. Dear participants, I pray that we benefit from this forum, derive inspiration, push us for more collaborations, enhance our curiosity, and above all, contributes towards development of Islamic banking and finance industry that we want. As I conclude, let me take this moment to introduce our guest speaker, Mr. Abu Bakr Athman, before inviting him to give his opening remarks. Mr. Abu Bakr Athman, besides being a friend for a long time, he is an experienced banker with 32 years of banking experience, some of which has been in the Islamic banking industry. He had previously worked with several banking institutions in Kenya, such as Dubai Islamic Bank in Kenya, also Habib Zurich in Kenya, Industrial Development Bank in Kenya, Equity Bank, Family Banks, and currently he is the managing director of Amana Bank, the first fully-fledged Islamic bank in Tanzania. With those introduction, I humbly request Mr. Abu Bakr to give us his opening remarks. Karibu sana.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. والصلاة والسلام على أشرف الأنبياء والمرسلين سيدنا محمد وعلى آله وصحبه أجمعين. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Distinguished guests, esteemed scholars, respected participants, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum assalam wa rahmatullahi wa barakatuh.
Khalfan, I'm having a problem with the camera. So I might not be, the participant might not be able to see me, but we'll be trying on our side to see whether it will come on. Let me start by welcoming all the participants to the second East African Islamic Banking Virtual Forum. It is truly an honor to be before you as we convene on this digital platform to collectively explore and advance the Islamic banking and finance industry in East Africa. In today's interconnected world, the role of Islamic banking and finance is more crucial than ever in fostering economic growth while adhering to ethical principles. As we embark on this one-day program, let us delve into discussions that will not only deepen our understanding of Islamic finance, but also contribute to the sustainable development of our economies and the Islamic finance industry. In the spirit of unity and shared commitment to ethical finance, today's forum holds great significance. Our region, with its rich culture, with its rich cultural and economic landscape, provide a fertile ground for the growth of Islamic banking and finance, a system deeply rooted in principles of justice, fairness, and ethical conduct. As we navigate through the day's program, let us reflect on the evolving landscape of Islamic finance. In a world confronted with economic challenges and uncertainties, the principles embedded in Islamic banking and finance offer a resilient and ethical alternative. It is a system that not only seeks financial prosperity, but does so with a conscience, ensuring that the benefits of economic growth are equitably distributed across society. I understand that throughout the day, our discussions will traverse a spectrum of topics, from the intricacies of Sharia-compliant instruments to the broader impact of Islamic banking and finance on sustainable development. We are privileged to have an assembly of experts, thought leaders, and practitioners who will share their insights, experiences, and vision for the future of Islamic finance in East Africa. Ladies and gentlemen, while Islamic banking and finance is gaining traction in East Africa, there are notable challenges that require our collective attention. Our significant hurdle lies in the lack of widespread awareness and understanding of Islamic banking products and services. This basically hampers its broader adoption and limits the potential impact on our economies. Additionally, the lack of supportive legal and regulatory frameworks for Islamic banking and finance is another challenge that necessitates careful consideration. Harmonizing the existing legal and regulatory frameworks to accommodate Islamic banking and finance while fostering an environment conducive to innovation and growth is a delicate balance that requires our thoughtful engagement. Moreover, the shortage of skilled professionals well-versed in both conventional finance and Islamic finance poses another challenge. Developing a robust talent pool equipped to navigate the intricacies of Sharia compliance and contemporary financial practices is pivotal for the sustained growth of Islamic banking and finance in East Africa. As we deliberate in this forum, our collective expectation should be to address these challenges. Through insightful discussions, knowledge sharing, and collaborative efforts, we can formulate practical solutions that will contribute to the advancement of Islamic banking in our region. By leveraging the collective wisdom present in this virtual gathering, let's aspire to chart a path forward that not only overcomes current challenges, but also positions East Africa as a hub for sustainable and ethical Islamic banking and finance. Ladies and gentlemen, in the context of our discussions today, I am particularly pleased to highlight the pivotal role that Amana Bank, as the first fully fledged Islamic bank in Tanzania, has played in shaping the landscape of Islamic banking and finance in our region. Amana Bank has been at the forefront of providing innovative Sharia-compliant financial services, setting a benchmark for excellence in the industry. In alignment with our commitment to the growth of Islamic banking and finance, Amana Bank has been actively engaged in spearheading the development of a robust legal and regulatory framework for a supportive in Tanzania. Recognizing the importance of a supportive regulatory environment, we have collaborated closely with regulatory authorities, the Tanzanian Bankers Association, SIFCA, and other stakeholders to push the agenda of a supportive legal and regulatory framework for Islamic banking and finance in Tanzania. And what I can say today is that the future is very promising. Looking ahead, Amana Bank remains steadfast in its dedication to pioneering new avenues for Sharia compliant solutions. We are committed to not only meeting the evolving needs of our customers, but also contributing to the broader development of Islamic banking and finance in East Africa. Furthermore, Amana Bank is keenly aware of the significance of collaboration. We understand that the growth and success of Islamic banking and finance in East Africa require concerted efforts from all stakeholders. To this end, Amana Bank is committed to fostering strong partnership with regulatory bodies, industry peers, and other stakeholders. By working together, we can collectively address challenges, share insights, explore innovative solutions to the challenges at hand, and collectively contribute to the sustainable development and prosperity of Islamic banking and finance in our region. Ladies and gentlemen, as we navigate the virtual corridors of this forum, may our discussions be guided by the principles of unity, mutual respect, and the pursuit of common goals. Let this day be a testament to the strength and dynamism of Islamic banking in East Africa. May our deliberations today be marked by a spirit of cooperation, a commitment to overcome obstacles, and a shared vision for the future of Islamic banking and finance in East Africa. At this juncture, I would like to express our sincere appreciation to the organizers of this forum. The meticulous planning and dedication that have gone into bringing us together today deserve commendation. Organizing an event of this magnitude, especially in the virtual realm, is no small feat, and we are truly grateful to the efforts invested in making this forum a reality. May Allah bless the organizers, not only for this event, but for their immense effort in promoting Islamic finance agenda in Tanzania and in East Africa in general. Thank you, and let us embark on a day of meaningful dialogue and knowledge exchange. Thank you, participants. Thank you, the organizers.
Thank you so much. Thank you so much, Mr. Abu Bakr Athman, Managing Director of Amana Bank. As we move along the program, now it is time to start our first session, which will introduce latest developments of Islamic banking and finance in our markets. As a presenter for that topic, allow me now to share my slides. I hope the slide is visible. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Salatu wassalam ala Rasulillah. Dear beloved participants, Assalamu alaikum once again and good morning. In this short slide, I'm going to share with you latest developments in East African context. But before that, allow me to quickly share with you the global landscape of Islamic banking and finance today. Islamic finance has been growing over the years, and as per the latest reports, it shows that Islamic finance assets has reached closer to $4 trillion US, and it's expected that by 2026 it will reach $5.9 trillion in terms of assets. No doubt, East Africa contributes towards this Islamic finance assets that we see today, but also will contribute to what we're gonna see in the future. In terms of its subsectors, Islamic finance has different industry players, the major player being Islamic banks that constitute the majority share of the total Islamic finance assets, followed by Islamic instrument known as Sukuk, which is used by governments and corporates to raise funds in the capital markets locally and globally. Also, there is Islamic funds that also play an important role in wealth creations in different jurisdictions. Also, there are microfinance and other Islamic financial institutions that also plays significant role, especially addressing the needs of the bottoms of the pyramids. More importantly is Takaful, which is a protection plan that enables us to preserve and protect wealth against calamities and hazards that are facing us from time to time at personal level or at business level. Islamic finance has almost reached in every part of the continents of the globe: Africa, Asia, America, Australia, among others. It is a mainstream finance in the global finance today. However, if we look at concentration and spread and dominance, we see that there are certain jurisdictions that have really managed to grow or acquire a larger market share. As per this report, as per this chart, which has been issued by Islamic Financial Services Board, it shows that Islamic banking market share in different jurisdictions as of 2021. Iran and Sudan, as we know, they are an Islamic economies with 100% Islamic banks. Saudi Arabia, almost 77% of banking assets are in Islamic banks and Islamic windows. Brunei, etc. More importantly is the position of Africa, where we see countries such as Libya, Djibouti, being in the top 10. I mean, Djibouti being among the top 10 of the countries that have some significant progress in terms of Islamic banking assets to the total banking assets in those markets. Coming down to East African Community member states, we see Kenya, Tanzania featured in this report. This is a significant recognition of the fact that our markets have a potential and opportunity to grow beyond what we see today. However, this requires efforts of each one of us in addressing challenges such as the one that has been highlighted by our guest speaker, which is to increase awareness of products and services. When you look at Africa, majority of African countries have one form or the other of Islamic banking and finance products, with an exception of a very few. However, we look forward to see that the whole African continent will be dominated with the blue color that signifies presence of Islamic finance in one form or the other. Dear participants, let me now quickly take you through the principles of Islamic banking and finance as we know it today. There are principles that need to be upheld in the provision of Islamic banking and finance, such as Islamic banking and finance instruments are supposed to be asset-based when it comes to it is financing products, as well as when it comes to capital raising instruments such as Sukuk. As we know, Islamic banks are not considering money as a commodity, but money is a means of exchange. For them to generate revenue and profit to stakeholders, they have to engage in trading of goods or provision of services that are needed by the respective clients. Also, Islamic banking and finance is based on instruments that are risk-sharing. And a good demonstration of risk-sharing principle is in takaful. Islamic insurance is based, or the backbone of it is risk-sharing. People or participants come together, join in a takaful in order to assist each other against a defined risk. But Islamic banks as well, they provide financial products that share a profit or losses with their clients as per the requirements or the needs of their respective clients. Islamic banking and finance embrace ethical practice by ensuring that those who are involved in offering these products and services, from the management to other staffs, other professionals, they are required to embrace Islamic code of conduct that entails to be honest, to be transparent, and to avoid bad behaviors that are condemned in Islam and in our humanity. Islamic finance promotes ethical investments, investments that are of social good rather than harming the society. So sectors such as alcohol or cigarettes are avoided or excluded when it comes to provision of Islamic banking and services. Sanctity of contracts is another important principle. Contracts need to be Sharia compliant and they need to be respected by parties. It is not a right of only one party to change the contract as it suits their interest. But depending on the contract's use, parties need to respect their rights and their obligations. They need to fulfill their obligations as they also look forward to enjoy the rights. Islamic financial products is for everyone, and hence the major value proposition of Islamic banking and finance is financial inclusion, that the products are available to everyone, irrespective of your religions or your ethnic backgrounds, among others. These are some of the principles that govern Islamic banking and finance. But also there are the don'ts with respect to provision of Islamic banking and finance. And the number one no-go zone is interest or riba. As you know, it is well known in Islamic finance that, or in Sharia, that interest is a grave sin, is a major sin, and hence Muslims cannot transact in lending products or other financial products that pays or charges interest. Another prohibition and an important element to be avoided in designing and provision of Islamic financial services is gharar, which is a speculative behavior or lack of a defined terms or lack of a defined subject matters, among others. Any form of unknown must be avoided. Parties should come to a contract whereby the terms are quite clear, the subject matter is quite clear, among others. So products that are of speculative nature, such as derivative products, the likes of swaps, options, futures, they need to be avoided. Gambling or game of chances of any form is another prohibition that needs to be avoided. Unethical investments also needs to be avoided. We are supposed to only support investments that are of social good for the benefit of humanity. Finally, in Islamic banking and finance, we must avoid unethical conducts. And this is very important for all of us who are involved in the provision of Islamic financial services. We should avoid rishwa or bribery, among other vices that are articulated in the Code of Conducts of IOFI and IFCB. So it's very, very important for us to make sure in the provision of our Islamic financial products, we uphold the do's and avoid the don'ts. Why we need Islamic banking and finance? Islamic banking and finance has huge potential and usefulness for different reasons. The major one is the fact that is well recognized nowadays that Islamic finance bridge the gap in terms of bringing everybody to the financial domain, or what is known financial inclusion. As you know, for many years, a country like Tanzania and Kenya, Muslims had excluded themselves from products or banking products, insurance products, due to the fact that they are contrary to their belief. However, with the coming of Islamic banking and finance institution, we see now Muslims are coming to use these products and be able to achieve their financial objectives. So financial inclusion is a big plus or a big value proposition that is brought on board by Islamic finance. Another important bridge is bridging ethics and finance. Okay, we have seen for so many years conventional finance just look at the economic value of a project. Is it profitable? Will it make money? But in Islamic finance, economic projects are not only evaluated on that lens, but also on the lens of social good. Is it ethical? Is it environmentally friendly? Among so many other factors guided by Sharia. Another important bridge is minimizing or avoiding a financialization of the economy. As we know, the recent financial crisis of 2008 was contributed highly, among others, due to the financialization of the economy. But we have, with Islamic finance, since Islamic banks, in order for them to do business, they have to use an asset or really assets, then we see that there is a narrow or a bridge is created between the financial sector and the real sector. They are becoming more closer, supporting each other to grow together, rather than money growing out of a thin air. As we see in conventional banks, interest starts to accrue and grows, and it has reached higher levels compared to the real economies of the world. Also, Islamic finance contributes to financial stability. It also contributes to alleviating of poverty and sharing prosperity. And also, more importantly, is the fact that in Islamic banking and finance, there is a diversity of products. It is not only about loans, but it is also about sale, about leasing, about partnerships. And all these contracts that are used creates different obligations and rights, as well as comes with its own risks and rewards. Islamic finance in our region and globally has been it has its drivers for growth. It is not just going to grow just like that, or it can't be left to chance to grow. In the world and in our markets, we have seen Islamic banking and finance is driven by private sector largely. And this is to say individuals, companies came together and started Islamic financial institutions. And this is the story of Tanzania and even in Kenya. However, the private sector will not be able to see development and progress without the support of the public sector, that is the government. And in this note, we appreciate governments, regulators in our jurisdictions and around the world to have allowed this business model and this system to operate in our jurisdictions. However, we look forward to see more contribution from the public sector, from the government as well, through their state-owned financial institutions and through their other economic empowerment programs or funds that targets to empower the people. We look forward to see Islamic financial models used by the government, state-owned enterprises so that everyone can be included and enjoy the benefits of Islamic financial products. Islamic finance is so broad. Sometimes when we talk about Islamic finance, we tend to think it is only about banks or microfinance institution. But the fact is, Islamic banks, Islamic insurance, Islamic microfinance institution, these are what we call Islamic corporate finance. These are institutions that falls under corporate finance. But Islamic finance also principles needs to be also upheld at individual level, at personal level. And in this regard, this is Islamic personal finance, is how you manage your finance. Are you managing your personal finance according to the Islamic finance principles which we had highlighted before? Also, Islamic finance reaches the domain of public finance, how the government funds its budget. Does it only use treasury bills or bonds, or it can also use sukuk, which are Islamic instruments to raise funds, among other instruments that are available. Finally, Islamic finance also is about social finance, and this has to do with instruments that are not commercial in nature, but rather seeks to address the challenges at the bottom of the pyramid. Loans. In Islamic financial perspective, loans are not commercial commercial products. They are charitable contracts that needs to be used to help the bottoms of the pyramids. Sadaqas, waqfs, these are examples of Islamic social contracts that have been used in our region and globally for social good. So these are all domains of which Islamic financial principles needs to be upheld. It's not just banks that needs to follow the Islamic finance principles, but us as individuals, governments, as well as other players. Now let me take you quickly on the developments of Islamic finance in our region, in East Africa, starting with Kenya. Kenya is a pioneer in the East African community with respect to introduction of Islamic banking and finance. More importantly, we note that the government of Kenya, as one of the crucial players in the driving of Islamic banking and finance, they have articulated in different strategic plans or midterm plans the vision of ensuring that Kenya is an Islamic finance hub. And to ensure that objective is attained, the government of Kenya has been doing different initiatives including reforming its regulatory framework. Progress has been made, but still a lot has to be done. For example, with respect to Capital Markets Authority master plan that ends this year, it is clearly articulated that by 2023, it is expected that Kenya will have transformed into a choice market for domestic and regional and international issuer and investors looking to invest and realize the investments in Kenya, within East Africa and across Middle Africa. The market will be the center of excellence for real sectors of the economies in which Kenya already had a significant capacity and potential, including agriculture, infrastructure, among others. And lastly, we see that Kenya is looking to deepen its financial sector by developing innovative products and services, including derivatives, asset management, and Islamic finance. And from where I sit, and from the latest development that I will share with you, we have seen Capital Markets Authority of Kenya trying to urge private sector and play its part in order to make sure the capital markets of Kenya has a diverse range of products that includes everyone. When it comes to market players, we have banks that are full-fledged. 3 banks are full-fledged, and these are well-known in Kenya, the likes of Gulf African Bank, Dubai Islamic Bank, and the former First Community, which is now called Premier Bank. First Community was acquired, as you know, by Premier Bank, which is a well-known bank from Somalia. And good enough that just yesterday we had the news that Somalia has joined the East African community. And this is a very important and good news, given that Somalia has so many full-fledged Islamic banks. Also, in the banking domain, we have 5 Islamic banking windows. These includes Absa Lariba, it includes KCB Sahel, NBK Amana, among others. But also there are investment banks, the like of Salam Investment Bank, and recently new player was licensed, and this is a Standard Investment Bank which has opened an Islamic investment banking division known as Sib Najah. In the Takaful space, we see there is one Takaful operator by the name of Takaful Insurance of Africa. When it comes to microfinance, there are different microfinances, some of which are known, some are yet to be known. An example of those known microfinance is like Momentum Sahih, Tijara Microfinance, among others. But also we have several SACCOs, the oldest one being Takwa SACCOs that was started in 1980s. Also, we have seen the coming of Stima SACCO, which has opened an Islamic window, but also there is Crescent Takaful. And in August this year, we had a women's SACCO, an Islamic women's SACCO, established in western region of Kenya. So we can see that we have players in several domains. When it comes to issuance of sukuk, we have seen known and published and unpublished the sukuk issuance, or those which are on the public and those which industry players or those inside the market are aware of. For example, First Community Bank had issued a sukuk, a private placed sukuk, many years ago. But as you know now, it is a Premier Bank. It's no longer First Community Bank because it was acquired by Premier Bank. Also, we had read in the news that Takwa SACCOs had issued a sukuk that aims to acquire a building here in Nairobi that with an objective of making it a headquarter among others. Also, latest in this year, we had latest news that Linzo Finco Trust also had issued a sukuk. So these are also crucial developments in the region. When it comes to investment products, we had seen different products offered, the likes of gold exchange traded fund. This is offered by ABSA. Also, we had seen a company called Ndovu introducing Ndovu Halal Fund, which enables investors to invest in halal equities that are listed in United States of America. And recently, we had seen through Standard Investment Bank launch last week, the introduction of Mansa Sharia Fund, which is a fund that enables ethical investors, Muslims, to invest and diversify their investment in different Islamic financial or Islamic assets that are available locally and in the global markets. Also, we have two pension funds in Kenya that have introduced Islamic windows or Islamic pension solutions. And this is CPF Saleh, Lab Fund Amal. But also we know Takaful Insurance of Africa has an umbrella fund that is designed to cater for the needs of the pension or retirement segment or retirement needs. When it comes to social finance, we see that Kenya, there are also different institutions that try to address aspects of Islamic social finance, the likes of Zakat Kenya, that is collecting and distributing Zakat, but also there is Jamia Mosque that is also collecting and distributing Zakat, but also we have a Waqf Commission in Kenya that is in charge of supervising and ensuring Waqf properties are well managed, and those administering Waqfs are competent and are accountable to the objectives of their respective Waqfs. When it comes to Islamic education and consultancy, Ummah University is one of the institutions that provides diploma courses on Islamic banking and finance. And this is very important in order to develop human capital that will be instrumental in serving this industry. Our company, Abrar Consult, established here in Kenya since 2019, is one of the players in providing professional training and consultancy. Also, there is Salihin and Sulhu Consultancy, among others. Those were players in the region, but we also see, in terms of legal framework, Kenya had done several initiatives in order to accommodate Islamic banking and finance, such as the Amendment of Banking Act in 2008, the amendments of Kenya Capital Market Acts, the amendments of rates regulations in 2023. Also, Capital Markets Authority of Kenya had joined Islamic Financial Services Board. But also we had seen reforms with respect to taxation in 2017, whereby the Finance Act removed some of the tax concerns with respect to Islamic financial products. And in 2019, Insurance Regulatory Authority had published a draft Takaful framework for Takaful companies. That was a brief about developments of Islamic banking and finance in Kenya. Let me now quickly share with you players in Tanzania. Tanzania is the next country after Kenya to adopt Islamic banking and finance. It has one full-fledged Islamic banks, as well as about 4 windows, Islamic windows, and some of them, as you can see in the presentation. Also, there is actually This year, one takaful operator was licensed and started to operate in Tanzania. There are several microfinance institutions, and notably the likes of Imam Finance, the likes of Yemco Microfinance, which is a newly licensed institutions, and others. In terms of sukuk, we had seen 3 corporate sukuk issued. Some are publicly listed and some are privately issued. And those who have issued, some of them are Amana and KCB and others. In terms of Islamic microfinance, Islamic SACCOs, we have one of the oldest SACCO in Tanzania, which is called Tampro SACCOs. And with respect to pension funds, this is an area that has yet to see a player, but there are prospects and developments and initiatives that indicates sooner or later we are going to have one existing social security fund introducing Islamic social security products. We hope that maybe, if not this year, next year, we're going to have important player in that space. With respect to investment products, there is one platform called M-Shirka, which is a fintech company that enables people to invest in Islamic equities that are available in Tanzania. With respect to Islamic finance education and consultancy, there are 2 notable universities in Tanzania that are providing Islamic finance educations. These are Zanzibar University, Muslim University of Morogoro, but also there are other consultancy firms that are also providing training and consultancy in Tanzania. With respect to Tanzania legal framework, we have seen just last year, Tanzania Insurance Regulatory Authority introduced takaful guidelines, which paved the way to the coming of Zanzibar Insurance, Zik takaful. After this regulation went out, published, we had seen one of the state-owned company from Zanzibar Insurance Corporation, set up a subsidiary called Zik Takaful in order to provide takaful products. Also, in the space of legal and regulatory framework for Islamic banking, a lot of initiatives has been taken by the Bank of Tanzania, as also highlighted briefly by the guest speaker, that a lot of consultations had happened and a lot of engagement still happens in order to ensure Tanzania has a robust legal and supervisory framework for Islamic banking in the country. On the sukuk front, also there are good news that the government of Zanzibar and the government of Tanzania, they are considering to develop legal and supervisory framework for sukuk issuance, not just by the private sector, but by the government itself. The government is looking up to set up a framework for its sovereign issuance. Good enough, this year we had seen accommodation and reviews and amendments on the tax laws in order to provide a level playing field for Islamic banking and finance products in Tanzania. That is just a brief, again, on the Tanzanian landscape and developments. With respect to Uganda, Uganda is a new entrant with respect to Islamic financial services. Just this year, we had seen a licensing of one full-fledged Islamic banks known as Salam Bank, and also we had seen in few years back an operation of finance trust bank opening or introducing trust halal accounts. Also, in Uganda, there are some microfinance institutions that have been formed. Some have been operational for some time, and some are still new entrants, the likes of Ustawi Microfinance, and also one of the oldest player is the Microfinance Support Center Limited, which has a window, Islamic window, to provide Islamic microfinance services in Uganda. Notably, Uganda is the first country in this region to have introduced Islamic banking regulation in 2018, which this year several amendments were done on that regulation. And with these amendments, we had seen the licensing of the first full-fledged Islamic bank in Uganda. Also, amendments were done on the Financial Institution Act, and also this year we had seen tax laws amended in the area of excise duty, VAT, stamp duty, and income tax. And if there is anything that these developments in these three countries that I've mentioned tells us, is there are progress and the future is promising. Finally, I would like just to highlight the future trends in Islamic banking and finance as a whole, not necessarily in our region, but as we see globally. And this is the coming of challenger banks, digital banks that has been licensed in different parts of the globe. The example of Rizq, which is a Sharia compliant digital only bank in UK. But also we see emergence of green sukuk, green waqfs, among others, that addresses United Nations Sustainable Development Goals with respect to climate issues, among others. These are global developments that are very promising and indicates where the future is the future that is ahead of us. Also, with respect to crypto, we had seen the introduction of crypto, Islamic crypto products, the likes of Comtech Gold or CGO, Islamic coins, Coin, among others. And we look forward to learn a lot from the presentation that will come next or will come later on, that will educate us about crypto assets, among others. So these are also important developments that has emerged globally. Digital financial solution also is another development that is happening around the world. We see now Islamic financial products and financing products are now accessed through mobile phones. This is something that really needs to be strategically approached, so that we break the barrier of brick and mortars and also reduce the cost of access of Islamic financial products. Also, we have seen introduction of products that are addressing the supply chain, which are supply chain financing solutions that has also emerged in our region. To conclude, I would like to also highlight some challenges that are still facing the Islamic banking and finance industry in our region. One, as earlier also mentioned by our guest speaker, is regulatory issues, liquidity instruments. Still in these three countries, the regulator, the Central Bank of Tanzania, Kenya, and Uganda, has yet to come up with a liquidity instrument that is compatible to Sharia. And this is a very serious issue, especially when we recall what happens to First Community Bank last year, when there were rumors and bank run, which really stagnated the bank's operations. That issue partly would have been solved if the Central Bank of Kenya had a liquidity or played its crucial role of being a lender of last resort by having a lending instrument that is Sharia compliant, that Islamic Bank can use in times of crisis such as the bank run. But also another challenge that we see is the skilled employees, people who are grounded or have gone to study Islamic banking and finance. Despite of the fact that there are universities in these regions that are providing Islamic banking and finance courses, still the number is not as good as compared to other courses. We still need to urge our youth, our future leaders in the industry, to study Islamic banking and finance courses at different levels, be diploma, degree, master, PhDs, among others, so that we have a wider skilled pool to serve the industry. Another challenge that also facing the industry is multi-skilled Sharia board members. Sharia board members is a crucial responsibility, is a huge player in Islamic finance, and having a board that is composed with members of diverse experience and stronger foundation in Sharia knowledge, Islamic finance knowledge, is an important ingredient. This is not to say that we don't have those multi-skilled, but we need more Sharia scholars, we need more experts in this field to serve as a Sharia board members. Another challenge that we see in the Islamic banking finance is lack of awareness. People are not aware about Islamic financial products and service, and sometimes there's a lot of misconceptions around these products that we need to work together, cooperate in order to create awareness of these particular products and services. Lastly is undercapitalization. In order for us to reach east and west and south and north in our respective countries, we need to, the institution, Islamic financial institution, needs to be well capitalized. Banks, takaful companies, and others, in order to reach a wider geographical region in our respective countries, we need to have a strong capital or a huge capital, of which is a challenge that is facing some of our Islamic financial institutions that hamper their speed growth and presence in wider geographical regions. So with that being said, a lot of efforts still needs to be done around this in order to address these challenges, and I believe that all of us can play a role either in creating awareness or the others. And please let us not feel that this is a responsibility of X, Y, Z, but each one of us has a role to play, including the minor one of you being a user of Islamic financial products. It is sometimes noted that with the presence of Islamic financial institutions in our market, still some Muslims are still laggards, are still staying behind, despite knowing that there are these products they are not using, they still stick with conventional services. This is something that needs to change, and that could be one of the steps towards your contribution and support of Islamic banking and finance sector. With that being said, thank you so much for your attentive listening, and I look forward to get your one or two questions before we invite our next speaker, which is Professor Monzer Kaf. Thank you so much. And now I can allow for one or two questions or comments before we proceed to the next topic. Back to you, dear participants. You can raise up your hand if you want to contribute, and we shall allow you to share your comments or your question. Karibuni sana. If there is no question, we will proceed with the next speaker. Okay, I've seen a hand. You can unmute yourself, introduce yourself, and put forward your comment. Samsung SMT. Yes, go ahead, brother or sister. Go ahead, we don't hear you.
Assalamu alaikum. My name is Asha, and I work at Dubai Islamic Bank in asset operation. My question is around creating awareness, because especially in the niche for women, I've had so many questions around Islamic banking. And I think it's also crucial that we create awareness to these women, especially in the Islamic insurance. So my question would be, do we have platforms where probably we could do a Zoom meeting with the women in the society who want to know more about Islamic finance and even the investment opportunities that are there? I know that I do advise them on the Islamic banks that are around, but even the fundamental knowledge around Islamic finance, the basic knowledge, do we get to have this Zoom meeting where people like you can now engage them and they can ask the questions that they have? Because personally, I feel that I don't have that much knowledge to explain to them everything in a session. Thank you.
Thank you, Sister Asha, for your comment. I'm not aware if there is a platform for women, but I'll be glad to hear from the participants who are here, whom part of whom are women. Maybe they have those platforms, of which I'm not privy. But with respect to us coming together and create awareness, this is one of the things that Abrar Consult supports, and we'll be glad to work together with any women group in order to educate about Islamic banking and finance. So that is what I can say about your point, which is very important one. Samsung, I see your hand is up, but if you can now unmute and ask, this will be the last one before we welcome Professor Monzer Kaf.
Assalamu alaikum warahmatullahi wabarakatuh.
Okay, Mr. Hamed.
Yeah, I was. My other gadget was giving a problem. I was looking at having spoken about challenges. I don't know if at any point we'll also be speaking about opportunities that lie in the Islamic banking space for the practitioners. Thank you.
Okay, that is well noted, and we'll try our level best to share those opportunities in the Islamic banking space. But just to remind you, when we were introducing players in the Islamic banking finance, you can see there is still a huge opportunity. For example, in microfinance, a country like Tanzania or Kenya I believe, has almost 1,000 or hundreds of microfinance institutions. But when it comes to Islamic microfinance institutions, they are very handful, as you would have noted in my slides. It's very hard even to spot how many out of hundreds of microfinance institutions there are Islamic. So that's an opportunity for business people to come together, invest, and provide this service to the bottom of the pyramid. Again, on Takaful, as I've mentioned, is still a few players, only one player in Kenya, one player in Tanzania, while there are almost 50 insurance companies in each of these countries. So there is an opportunity in the supply side. There is a lot of opportunity on the supply side, which we need to either locally mobilize ourselves to come in and provide those services, or partner with foreign investors in order to provide these services. But I believe as other speakers come in and share their thoughts, you will be able to grasp other opportunities that are available in the space. That being the last comment, due to the time, or the end of the Q&A. Now, I would like to invite Fatma Dakik to introduce our next speaker. Fatma?
Thank you, Mr. Khalfan Abdallah. The session was insightful and informative. Well, our second activity, the topic will be towards a new theory of Islamic finance, led by Professor Munzer Kah. A bit of introduction. Professor Munzer Kah is a professor consultant and a trainer on Islamic banking, finance, zakah, awqaf, Islamic inheritance, Islamic estate planning, Islamic family law, and other aspects of Islamic economics, finance, Islamic transactions, muamalat. Professor Munzer is currently a professor of Islamic finance and economics at the Faculty of Economics and Management in Istanbul Sabahattin Zeyn University in Turkey. He has written 38 books and published over 91 articles in English and Arabic on trusts, awqaf, zakah, Islamic finance and banking, and other areas of Islamic economics. Since 1973 till date, he has been contributing to conferences, seminars, and training programs across North America, Europe, Africa, Asia, Far East, and the Middle East. Professor Munzer was awarded the Islamic Development Bank Prize for Islamic Economics in 2001. He speaks English, Arabic, and a little of French. I would like to invite Professor Munzer. Welcome.
السلام عليكم ورحمة الله وبركاته. بسم الله الرحمن الرحيم. الحمد لله رب العالمين، والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. I want to share my slides, but here I got a message: host disabled participant screen sharing.
Let me enable you, Sheikh.
Okay.
A minute.
I send you a message though now when I got this message.
Okay, let me allow you. Okay, you can try now, Sheikh.
Okay, I think we got it now.
Yes, I can see it, but
So
maybe you can.
This here. Go.
Yes, that's
there.
good.
Okay. طيب. Well, my subject is going to be on property as really a new proposed theory for Islamic finance, and look at some of the implications of this theory. Of course, I said already, Bismillah ar-Rahman ar-Rahim, but it seems that the system doesn't give the slides in the appropriate sequence. So after this slide, there is another slide which is not coming. So what is the system here? There is a slide before this, which I don't see it coming, and I don't know why it is this way. So please, either I will remove the sharing, stop share, because it's not giving me the appropriate slides that I need. So here, I don't know what to do with this. I have the slides, but you can't see them. Okay.
You can try again, ya Sheikh, or check the arrangement of your slide. Maybe.
Okay, my slide number, let's see, this is number, my slide number 4, which is after the title and the copyright and after Bismillahir Rahmanir Rahim. We look at one of the very, very basic issue, which is, how do we provide Islamic finance? What is really, in a sense, in a few words only, what is Islamic finance? It is provision of finance either through sale or through leasing or through sharing. So provision of finance, when we call it Islamic finance, must be through one channels. If it is not through any of these channels, then it is not definitely Islamic finance. But we want to really take a closer look at these 3 channels. What do they imply? And what do they negate also? We negate lending. Lending is not a way of providing Islamic finance. It's not acceptable. Of course, we are talking here about profit making or profit seeking finance. We are not talking about charity, because in charity you give donation, you give anything. That's different thing. That is a different kind of financing. But profit seeking or profit making finance can only go, according to our Sharia, through sale, lease, or sharing. So when we are excluding lending, we'll come back later to this point. But the important thing now is, what is the implication? What does it mean if we provide financing only through these channels? It definitely means that the finance provider has to own a thing and sell it, own it and lease it, own it and produce through it with other partners goods and services and sell them. That means definitely that ownership is the basis of Islamic finance. Now, ownership of what? That is also an important question, and that will lead us to the distinction between the essential distinction between lending and owning. So here, if I share, I don't know how to reach that sharing again. Okay, can I? Okay, should I try sharing again and see if? Okay. Okay, here it comes. This slide is what is very important. Is it now visible on your side? Let me take it through this system. It's okay, probably might be easier. Or yeah, at least it gives that facility. It showed me if there is anything missing. Okay, so
it is clear. It is clear.
Based on these three channels, we reach the idea that there is always ownership in Islamic finance. But again, ownership of what? In Sharia, we consider things that are not acceptable morally. They are not properties. You cannot even own them. So the rule for them, anything that is not moral, the rule of it is it cannot be purchased, it cannot be owned, it cannot be sold, it cannot be traded, and of course, it cannot be financed, because simply it is nothing. It is something that hurts rather than benefit. So we take it outside completely the basket. So that means we have to look at the moral idea in what you own, and accordingly in finance, that is the moral screening becomes essential, because you have to own it. It is intrinsic inside the process. If you own something that is morally not acceptable, you have to destroy it. You cannot sell it, and you cannot make profit then out of it. But again, the other thing which is equally important is that there must be an addition created, an added value created by that property that you own. So you own a thing, you own a property, and this property must be able to create an added value, and also must actually create added value in order to be able to earn in finance. So when we own a commodity, give it on sale, give it on leasing, or it's part of the infrastructure that is needed to produce goods and services, then through musharaka concept or any concept of sharing, that means that we the ownership theory requires that what you own must be by itself able to generate additions, and additions means added value. Could be abstract or could be physical. Now, if I go to the next slide, we notice that a lender then cannot earn rationally, cannot earn any increment, because what the lender owns is not able to generate any added value. Debt does not generate added value. To be literal, if you take that example, we haven't seen a debt giving birth to a baby debt. And we haven't seen a debt giving utility, such as, for instance, warmth. When I wear my jacket, I feel warm. So a debt does not give that. The debt does not generate utility, it does not generate benefit, does not generate increment, physical increment, does not generate added value. And this is really the essential part, or the essential call it component or call it substance of what is called in our Sharia that riba is based on dhulm. Dhulm is injustice, not necessarily exploitation, but kind of exploitation. It is dhulm of the reality. Your property does not generate anything. So where do you get that increment then? How do you deserve an increment if your property does not create increment? If your property creates increment, that's fine. But your property is a debt. Don't ever tell me that the borrower may have used it to create increment, but that is then that increment would have happened in the property of the borrower, not in your property, because you know that loan transfers ownership. You are not the owner of the property that is in the hand of the borrower. You own a debt on the person, on that person or economic entity, the borrower. So your property being a debt does not generate any increment. Now, the second implication, which is not less of important, rather this is the third implication. Notice that once we notice that really the foundation of Islamic finance is owning a property, then we can obviously conclude that price risk is not a reason for earning. Liquidity risk is not a reason for earning. Credit risk is not a reason for earning. None of these justify earning. And if you take it, if risk does not generate any earning, then risk sharing also does not generate any earning. In sharing, when it is claimed that you are in risk sharing, and many people thought that Islamic finance is a risk sharing finance, which is one of the most one of the most unreasonable statement. Islamic finance is property based and not risk sharing based. It is property based, and the property must be able to generate added value, and this is why Islamic finance can earn part of this generated added value. It is not taking risk, whether price risk or liquidity risk or credit risk, that justify earning. Earning, the only justification, the only exclusively from any other thing, the only justification for earning is owning a property that is moral, able to generate an increment, and also actually generates an added value. This is both consistent with the maqasid al-Sharia and with the individual text that we have in Sharia. You cannot take an example, for instance, when you finance on sale, you have not only to contract a sale, but to physically obtain that item that you bought before you can make any earning through it. And to make earning through it, of course, is by selling it to your customer. You have to own it and possess it so that your ownership becomes full and complete and has no dent and no question mark whatsoever. It is that possession that makes ownership complete. And in Sharia, definitely in Islamic banking as practiced today, if the ownership is not completed by possession, the sale, which makes the profit to the customer, becomes invalid, and that claimed profit becomes really unearned and has to go to charity and cannot be earned by the finance provider. So ownership is what matters. And of course, ownership bears with it not only entitlement for the increment that is created, but also it bears the risk of ownership. So when we talk about any kind of risk, one kind of risk only is what justifies or relates to the justification rather than justifies. It relates to the justification because the justification is in the ownership of a property, and the ownership risk relates to that ownership. So the ownership risk, yes, must be always there. And if it is not borne, then the ownership is not complete. We are then talking about really a new theory. And look at it, it applies also not only in finance, it applies in economics, in the theory of production, for instance. Who earns the profit? We don't accept the idea, the entrepreneur. Who owns the profit is the owner of the project. The owner of the property is one who owns the profit. As a matter of fact, yani, as a side point, not in my main presentation, a side point, it seems there is a contradiction in the Western economics literature that is adopted and taught in all universities today, that profit belongs to the entrepreneur. Really, profit is in the Western culture and in the Western economics itself is distributed to the owner of the company or the factory. The owner is the one who bears its risk if it fails. So the owner is related to the ownership risk, and that is, for instance, in common stock companies, we distribute profit to shareholders, not to manager who may be the entrepreneur also. Where the entrepreneur may be hired for a predetermined the compensation like any other element of the production or factor of production. Land, labor, and entrepreneur could be hired. In some kinds of projects also, the capital could be higher, but the owner of the idea would be the owner of the project. That is a little on the side, but this is a kind of note of criticism of the conventional economics that is being taught in the in middle undergraduate, and in fact even in graduate school. So entitlement for return is caused, and I put 3 lines under this word, caused by ownership of a value adding property, which is of course moral. So this is the theory, and that applies in the theory of the production, in the Islamic theory of production and the profit, or rather the distribution of the output between the factors of production. It applies also, interestingly, in social finance. In social finance, like in zakah, in charity given to NGOs, or in awqaf, the ownership also is the essential factor to be able to generate or to create a waqf, or to create to pay zakah, and even to pay charity. So even in social finance, ownership is the essential factor, or the essential prerequisite for practicing any Islamic social finance. Okay, now let me go back to these three channels: sale, leasing, and sharing. We notice again from them that we really are talking about, or we are generating, rather implying, these four axioms that you may see them. I hope now it is shared. Okay, these are axiomatic principles in Islamic finance. One, earning can only be by owning. Two, financial assets are mere representation. They are not true. They are like a veil. We look at what is behind them. They are mere representation of what is behind them, and we always deal with what is behind them. For instance, this is why you cannot sell, according to Sharia, a share of a company with forward delivery. You can sell it with immediate delivery. You can sell it with deferred payment on credit, but you cannot sell a share for forward delivery, because what is the share from Islamic point of view? It is a partial ownership of the composite of assets, all assets of the company, minus its liabilities, adjusted by the market valuation. So we are talking about the real assets and the real liabilities here, and assets and liabilities are variable across time. Every minute they vary. With this variation, you cannot deliver what you sold. You sold the share today, and when the delivery day comes after a month, for instance, you are delivering something else. You cannot deliver what you've sold. And this is why, according to Sharia, and there is an Awafi ruling on that, you cannot sell a share with forward delivery or on salam basis. This is unlike, for instance, sukuk al-ijara, because in sukuk al-ijara, although they generate income, which is rent, in fact, the asset is there, and the asset is not changeable through time. So you can sell sukuk al-ijara even with forward delivery, unlike a share of a company. So the earning is always by owning. Financial assets, we don't look really at them. We can be considered like financial assets blind. We look always at what is behind them, and we apply the rules on what is behind them on them. The principle of realism, there ought to be all the time. We deal with the real market, with the real property, with the real assets. We don't accept fiction assets. imaginary assets are not acceptable. And of course, the moral commitment, both in the asset that we deal with or the commodity we deal with, and also in the way we deal with it. So the way we deal with it has to be also morally acceptable. For instance, gambling is rejected because it's a way of earning, but the way of earning is not acceptable because it lacks the moral principle of earning by owning also. It is itself a moral principle. What do you own in gambling to earn? You don't earn in gambling. So it's not acceptable as a way of earning because itself, as it is described in our classical books of fiqh, this is abath. There is no reason for transferring a property from one person to another through gambling. There is no reason. Why should the property be transferred? That is not an acceptable reason, gambling. So it is nothingness. Abath means nothingness. It is nothingness that requires. Then how would you transfer a property from one person to another? It should not be. And so this is, again, the moral commitment applies in both commodities, the subject of the contract, and the way of the contract itself. Now, once we understand this new theory of finance, which is the property theory, we need to deal with a few points, and I will deal with them quickly. With the point of risk, how do we deal with risk? Development, is Islamic finance developmental? Do we make any role, developmental role of the Islamic finance provider? The issue of ethics and morality and what are their bases, and also the contribution to society and environment. Let me go quickly through these. Risk from Islamic point of view, risk is not a commodity. It cannot be sold. It cannot be purchased. It cannot be a way of earning. Risk is rather something we don't like, something we like always to avoid. And if that happens, the peril of the risk happens to a person, we need to help that person, not really to buy risk or sell risk from it. And this is the essential reason why conventional insurance is not acceptable. So risk exists everywhere, and with anything we do, and when a risk happens, we help the person in any way that we can. So how do we deal with risk in Islamic finance? One, risk is not an asset. No risk trading, no risk sale, no exchange-based insurance contract. And the Islamic insurance contract is a cooperation-based, not exchange-based. Justice requires definitely earning by owning. And this is a moral principle itself, in as much as it is also a rational, realistic principle. Owners bear property risk all the time, and that is part of ownership, because owner of a property is exposed to any risks that may happen to it, and it is also entitled to any return that is generated by the property. The third point is that Islamic banks have to bear ownership risk, because ownership risk. Without it, they cannot earn. The ownership will not be complete without bearing the ownership risk. So this is the third point. They have to, in order to earn, you have to own in a full sense, including bearing the risk of your ownership. Of course, they have to also, because they are financial institutions, they have to bear credit risk. The fourth point, there is nothing in Sharia or in any legal market really that requires Islamic bank to bear market risk. So I don't have to own a commodity and expose it in the market, offering it in the market and bear its market risk, whether the price or the liquidity. There is no such requirement in Sharia. And the claims by some writers, unfortunately, the claim by some writers that you have to bear market risk has no base in Sharia and no evidence whatsoever. The next point is wakala. We take funds in Islamic banks. We take funds from depositors on wakala basis. Investment deposits are on wakala basis by their nature, because this is the underlining condition of mudaraba and of musharaka and of muzara'a and musaqa and mugharasa. All sharing contracts in Sharia have this underlining wakala. So the Islamic bank takes funds from investment deposits on wakala, and this wakala principle requires the bank to minimize the risk and to avoid any risk that can be avoided. Minimize it, mitigate it, and avoid any risk that can be avoided. Again, prudence rules of commercial banks, Islamic or otherwise, and we are talking here about Islamic banks. Of course, prudent rules or prudence rules require that the Islamic bank should maintain adequate liquidity and match liquidity on the two sides of its inflow and outflow. So this is the issue of maturity is part of the prudent, meaning avoiding any liquidity risk is necessary because of the principle of prudence and because of the principles of wakala also. The last point here is that commercial banks, Islamic and otherwise, have legal and economic responsibilities to observe the effects of their actions on the monetary and economic system as a whole, and meaning avoiding risk is a required issue in Islamic banks as much as it is also required in conventional banks. How do we deal in Islamic banks with risk? Property risk must be borne, no doubt about it. Market risk, price risk, liquidity risk should be avoided as much as possible. And the best way of avoiding them is by using contracts that give us definite inflow of funds later or of cash later, which are sale and leasing that ends with ownership, and avoiding contract as actually the Islamic banks do, avoiding contract that don't have any definite future inflow of funds. credit risk, Islamic banks have to bear it because they are providing credit anyway. So they are providing financing. I go to the second point, the Islamic bank financial, Islamic finance and development. Is a banker required to make any preference from its own or his own or her own, any preference for financing investment over financing consumers? In fact, this is not the job of a banker. So Islamic banker should not take that role at all, and rather taking that role will be infringement on the decision maker, who is the consumer or the business person who wants to make investment. So it is incorrect to claim that Islamic finance and Islamic banks should give preference to investment over consumption. Why? There's no reason for that. This is a decision that consumers make, that income earners make, not Islamic banks, and it is not the job of a banker to take this kind of charge. Of course, in Islamic finance, or rather in Islamic economics, we reject extravagance, we reject wastefulness of resources, whether as a consumer or as a business person. In both ways, we don't accept extravagance and wastefulness. And the teaching of Islamic finance, Islamic economics in general, is always based on making best use of resources that one has. We have, in fact, some ideas also. Does Islam prefer consumption over investment, or investment over consumption, saving over consumption? Or this is a matter of personal thing. We should not interfere in it. Although the general advice, how do you deal with your properties? The general advice of the Prophet Muhammad sallallahu alaihi wasallam is that use it to the utmost you can, because God will take care of your heirs later. Use it to the utmost you can. And there is a hadith, which is a correct hadith, a very authentic hadith, that tells us that best way a person behaves with one's own properties is to use it for your own consumption, whether for food and enjoyment, or for clothing and feeling comfortable with it, or for any other use, or for charity. And then you are saving it with God and getting it there multiplied. Otherwise, what you leave is behind is really not your property. Your property is what you use, and what you leave behind is the property of the heirs and not yours at all. So we have this hadith. We need to keep it as one of our guides in this, although there are other, but these other hadith are circumstantial. A person was in the deathbed, and he asked the Prophet whether he should give everything for charity. He told him, no, leave some good part for your heirs, and don't give much for charity. He was on the deathbed. I mean, he is not able to enjoy anymore his properties. So of course it is going to be left. Either you leave it to heirs or to give it to charity. So distribute here and there, but don't give. He told him, don't give more than 1/3 to charity at this point. So that is, we are talking about special circumstances, not a person who is able to enjoy own property. Enjoy your own property. That is the advice of the Prophet Muhammad sallallahu alayhi wasallam. The last point here is interesting. Is we should notice that Islamic finance, by not financing anything that is haram, and the criteria of the haram is what is more, its bad effect or good effect. If the good effect of a thing are more, then it is good, it's not haram. If the bad effects are more, then it is haram. And this criteria is given in the Quran itself. And it is only pure scientific criteria. By abstention of financing the haram things, the harmful things, we are really supporting good life in the society. We are supporting good health. We are supporting better enjoyment of consumption, and so on. So when we say we don't finance liquor and cigarettes, don't blame us for that. We don't finance them because they hurt everybody, whether Muslim or not Muslim. They are hurtful and should not be financed, should not exist even to begin with. Government may take responsibility for improving the situation of the society, the economic lot of the society. And once a government takes such decisions, all economic units should abide, including Islamic banks. So if the government makes certain regulations for development purposes, that you should finance, for instance, 60% of your finance should go for investment, then Islamic banks and all finance providers in the economy should abide by that rule. It is not the decision of the banker, and it is not the nature of Islamic finance. It is rather the development, investment is a decision that is made by individuals, by the income earners, and supported and helped in this decision making by the government. So government may interfere in that, but not definitely bankers. So Islamic banks need not to be more oriented toward investment than toward consumption. In fact, both consumption and investment are developmental, because consumption gives signal to producers. When you enhance consumption, producers get the market signal and produce more of that thing. Okay, now we go to the moral dimension that is, we discussed it almost before, but I want to mention one thing in this issue of moral dimension. The moral dimension in Islam is based strictly on rational scientific knowledge. But we accept knowledge that becomes real knowledge, not still in the stage of being theory and interpretive only. When it becomes knowledge, we accept it and we apply it, and that is what makes the moral standard. In the verse 157 of Surah number 7, Allah subhanahu wa ta'ala informed us that he only prohibited what is harmful. He only prohibited the bad things. He did not prohibit any good thing. So the statement that I heard 20 years ago, that red wine is useful for the heart, came to be falsified scientifically, that by the American medical Association and by the International Health Organizations, both of them scientifically concluded undoubtedly beyond any point of doubt that the only quantity of liquor, any kind of liquor, the only quantity that is not harmful to human body is 0. And anything beyond 0 is harmful to human body. So this was confirmed. I have no doubt that eating the meat of pig is going to be proven sometime in the future. Again, beyond doubt, scientifically. It is already proven that cigarette smoking or the use of tobacco in any other form is harmful, and it is being confirmed scientifically. This is why we consider it not financeable, cannot be financed in Islamic finance, because the harm of it is more than the benefit. Even in liquor, the Quran recognizes that there are some benefits to some people in it, but the harm is more than the benefit. This criteria is a scientific, rational criteria made in the Quran, and we don't need really to go beyond that. So this is the issue of morality is handled by that. I think I will stop here and leave the last point, because if it is moral, definitely it is better for the society, and it is better also for the environment, because al-ifsad fil ard is not acceptable in our religion, whether through financial institutions or through any other institutions. Al-ifsad fil ard meaning doing wrong on the earth. So doing wrong on the earth in any aspect is not acceptable in our Sharia. With this, I close, and I'll be glad to respond to any questions if there are questions. We started anyway more than 5 minutes, 6-7 minutes late. So we have about maybe 6-7 minutes now for questions at least. If there are questions, I'll be glad to answer them, including if you want the question of banks creating money. If someone asks it, I will also answer that. Walhamdulillahi Rabbil Alameen.
Okay. Thank you so much, Professor Monzer, for very good presentation. I hope I'm audible. Prof, you can hear me?
Yes, I hear you.
MashaAllah. All right. Now we are going to allow some few questions. And I'm quickly checking on the chat to see if there is any question posted. But if any of the participants wants to ask a question, you can raise up your hand, and we'll be glad to invite you to ask Professor. Okay, let me quickly. Okay, there is one question here, Prof. Are you there?
Yes, I am here.
Okay, I'm reading for you from Stephen Gitau. He says, a very insightful presentation by Professor Monzer. I would like to understand how the principles of ownership applies to financing of real estate development projects and acquisition of homes. That is his question.
Well, exactly the same way, because house financing in Islamic banks and in Sharia in general is done either through sale, like murabaha, the bank owns and then sells to the customer, or through leasing, which is more common. The bank and the customer own together, and then there is a pledge of selling the part of the bank, the Islamic bank, to the customer gradually, month after month. And so you own and earn by owning. it is not made on share. What is called musharaka mutanaqisa in house financing is in fact ijara mutanaqisa. They both own together, and the share of the Islamic bank is being purchased by the customer gradually through installment. Meanwhile, the bank earns rent for the part that is not sold yet. So it is exactly the same principle applies in house financing.
Thank you, Prof. I will now allow Dr. Suleiman Luja to ask a question or comment.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam wa rahmatullahi wa barakatuh.
Yes, on that point, on that note, that very note where the professor talked about credit creation, which is contested world over, credit creation as the cardinal principle of conventional finance. Do Islamic finance or Islamic financial institutions also create credit when you look at the tawarruk, because tawarruk is contested, especially in the Middle East? Now, when you come here to Islamic financial institutions, tawarruk, is it a replica or a representation of credit creation, which is contested in conventional? What is Professor's take?
Well, credit creation is practiced in two ways, and banks vary. Not all banks in all countries make it the same way. In some countries, example of it is UK, for instance, when a conventional bank gives financing, it gives it as a credit in the customer's current account. So a loan is written on that in the records of the bank, and a credit is given to the current account of the bank. This is called credit creation. This is one way, but credit creation is also done by the banking system, because when you finance any transaction in the market, the recipient of that fund, the seller, say for Islamic finance, and also the seller, if it is used really for sale in conventional banks to buy something, then the seller will go and deposit that amount in the banking system. So but the banking system altogether creates credit through what is called these derived deposits. Deposits are derived from the payment of the finance, and because the recipient of this finance, the seller, deposits their funds again in their current accounts. So the derived current account deposits are called money, are considered money. In Islamic finance, the first form is not done. Only the second form is done in Islamic finance because of the principle of ownership. You have to own, and once you own, you take the commodity and pay its price to the supplier. Then the supplier gives you, may deposit again this deposit in the bank. So derived deposits exist. Whereas the credit, we don't give cash in Islamic finance. You mentioned in the question tawarruk. Tawarruk is not Islamic finance. Tawarruk is haram. This is the ruling of the OIC Fiqh Academy with more than or about at least 3,000 scholars in their meeting in Sharjah in United Arab Emirates in the year 2009. They declared that tawarruk is literally interest itself. It says rather it is pure interest. So tawarruk is out of the question in Islamic finance, but tawarruk, yes, creates credit at the time of practicing it, not Islamic finance, which is done through sale, lease, or sharing. That does not create credit at the time of granting the Islamic finance. Because at the time of granting the Islamic finance, commodities are purchased and funds will be paid to the supplier, not credited to the customer account in the bank itself. Unlike banks in UK.
Thank you, Prof. There is other question would like to share with you on the chat. Somebody is asking, Prof, kindly clarify how financial institutions should not bear the market risk, but avoid it, bearing in mind that market risk is a wider spectrum, including change in equity price, which the financial institution should bear.
Well, now we are not in a class of risk management in Islamic financial institution.
Yeah.
Okay. When we talk about financing, we finance through sale, lease, or sharing. Islamic finance give finance about 98% sale and lease, and 2% or even less than 2%, and some banks 0% in many banks. And these 2% they give them through sharing and with loads of conditions that are questionable from Sharia point of view, like the condition of expected price, expected profit. If you don't make the expected profit, you have to give me 1,001 evidence that you really did not abuse the asset. And all these 1,001 evidence are impossible to give. So you claim that, okay, I made that profit, because you cannot prove it otherwise. These conditions are not acceptable really in Sharia. Although, unfortunately, we have everywhere in the world that people will give things without really taking the full picture, give ideas without understanding the full picture. So here, how do we avoid in financing the market risk? By taking a commitment from the customer that he is going to buy or take on lease ending with ownership the commodity before I buy it from the market. So I take that promise, and if the customer fails in fulfilling that promise, I am entitled to compensation of any damage. I don't make profit from that because I didn't make ownership. So I cannot make profit. See the consistency of the theory. If you own, you make profit. But here I didn't own. How can I make profit from the customer? But I take this provision that I had a deposit with him, the escrow fund, which is called the Hamish al-Jiddiya, margin of seriousness. It's escrow fund. I take it for that. If he fails to fulfill it, any damage caused to me will be compensated. And I take that compensation from it. So here where I avoided market risk by getting the commitment to be bought from me before even I buy it from the market.
Thank you, Prof. Just last question, and the request to be brief because we are already running out of time. We have had some guys asserting that fractional reserve system, fractional reserve banking system is a riba banking system. What is your take on that? Just briefly.
I don't agree with that. Briefly, I don't agree with that because it gives us a lot of easiness, and it is a benefit that we should use. Why should we give it up? And it is not really based on riba. Where is the riba in it? In the fractional reserve system, there's no riba. Besides, fractional reserve system will imply that if someone wants to come and put a deposit with me, I should reject it because I cannot take it. Why should I take the derivative the deposits in current account? That means you are restricting my freedom without any reason. I am free, and I should be able to accept any deposit from anyone. So why are you restricting my freedom? It's unnecessary, but yet managing the fraction, managing the reserves by the central bank or by the government representation is important, because that management gives the authority to the government to manage the quantity of money in the economy.
Thank you. Thank you so much, Prof. We really appreciate you being here and for the word of wisdom you have shared with us. Thank you so much. Now we will proceed to the panel session, and I would like to invite Fatima to introduce our moderator and our panelist. Fatima?
Yeah, but thank you. By the way, and just give my salam to all my colleagues and friends that are speakers or attendant with you guys. Alhamdulillahi Rabbil Alameen. Thank you.
Noted, Prof. Thank you. Fatima?
Now, well, our third activity is a panel discussion on offerings of Islamic banking or windows in East Africa. Will be moderated by Dr. Khalid Aman from Premier Bank and our panelist. Brief introduction on Dr. Khalid. Dr. Khalid Aman is a co-partner and chairman of Sharia Committee of Abrar Consult. He leads Sharia Department of Premier Bank. Previously, he worked as a solicitor consultant and lectured Islamic banking and finance courses at local universities. He holds PhD in Islamic finance from International Center for Education in Islamic Finance. He has co-authored a book on Sharia and legal analysis of sukuk contracts. Our first panelist is Mrs. Aisha Awad. Is the head of retail banking at Amana Bank Limited. She is a professional banker with more than 16 years of experience in the Islamic banking industry in Tanzania. Our second panelist is Dr. Sulaiman Luja. He is a banker, Sharia advisor, and auditor who has practiced and taught of Islamic finance, Sharia, and banking for over 10 years. He has actively participated in the process of amending Uganda's legal framework to accommodate Islamic finance and has worked with government bodies, NGOs, and the private sector to develop Islamic financial system in Uganda. Dr. Suleiman is the manager Islamic investment at Microfinance Support Center Limited. He is a senior trainer of Islamic Banking and Finance Institute in Malaysia, head of Islamic Banking and Finance Department, and a lecturer of Islamic Finance at Islamic University in Uganda. Dr. Luja holds a PhD in Islamic Banking and Finance from Malaysia. Professionally, is a certified Sharia advisor and auditor of accounting and auditing organization of Islamic financial institutions from Bahrain. Our third panelist is Mrs. Saada Muhammad, currently serves as Gulf African Bank's head of business. She is a seasoned banker with over 10 years experience in various roles, particularly in SME, credit management, corporate banking, strategy development and execution, leadership and transformation, customer service management. She holds a Bachelor of Business Administration in Finance and is a certified investment financial analyst. Our fourth panelist is Mr. Hamid Hassan. He's a career banker spanning over 18 years, with 15 of them in Islamic banking and takaful. He has worked with First Community Bank, now as Premier Bank, as head of business. He also worked as head of business for Takaful Insurance of Africa. He currently works as head of Islamic banking at Absa Bank, Kenya. Mr. Hamed also previously worked as a part-time lecturer at Ummah University in the Department of Islamic Finance. I would like to invite Dr. Khalid from Premier Bank and our panelist.
Thank you, Fatma. Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good morning to all the participants of today's function. I'm actually privileged to moderate these discussions with the distinguished and eminent panelists. And I'm looking forward to having a fruitful discussion and more so to learn more from the discussion. Maybe I will want to start with Dr. Suleiman. From your end, I understand that you're hailing from Uganda, and from what we've heard that since yesterday, or from yesterday, we've joined, or Somalia has joined basically the East African community. Possibly we'll be having more members from those other countries. But from your end, and on matter Islamic finance, maybe can you give us a highlight of what Uganda has accomplished and what we're expecting from the industry? Thank you.
Thank you, Dr. Khalid, and all members present here. Assalamu alaikum wa rahmatullahi wa barakatuh. Uganda, as you are aware, is part of East Africa community, East African community. It is also OIC member country, Organization of Islamic Cooperation. And Islamic Development Bank has set up its regional. Can you hear me? Yes,
yes,
it has set up its regional office, the hub, which is, okay, maybe let me remove the headsets. We are privileged also in Uganda to host that office, the regional hub of the Islamic Development Bank, among the 5 countries in this region. Uganda has been chosen by Islamic Development Bank to set up its regional hub here. You know, that office is taking Somalia, it is taking Djibouti, Comoros, Mozambique, and Uganda. Those are the 5 countries which are taken by Islamic Development Bank. The regional hub office is set up in Uganda here, so you can see that there are many opportunities. And maybe this is one of the factors why the issue of embracing Islamic banking was expedited by the government of Uganda. It has been a discussion here in Uganda since 2008. You remember in 2008, Uganda hosted the OIC Summit, Organization of Islamic Countries. All of them, they came to Uganda here. This September, on 8th of September, we are also privileged to have the first Islamic banking license in Uganda. We have been doing this because the enabling laws were amended in 2016, and that is when we started Islamic Microfinance and Microfinance Support Center. That is where I'm managing Islamic investments. But on 8th of September, we witnessed the first Islamic banking license being issued by the Central Bank of Uganda. And the license has been given to Salam Bank. Salam Bank, you know, it is a Djibouti-based bank, which has come to this market. It is new, although this market has some challenges, but we hope that it has come full blast or with a fully fledged Islamic banking operation. It's going to do only Islamic banking, not just window. Other banks, of course, like KCB from Kenya, they are going to also to embrace, because we hope where they are coming from, they are doing it already. Absa Bank is already doing it in South Africa. It has to do it. It has a significant number of Muslim clients. It cannot afford to lose this clientele. So even many other banks, Standard Chartered, Equity Bank, you know, they are international. Uganda is a dynamic country. It embraces everyone. You have seen our president going all over the Middle East. He has been in Dubai recently, last week, trying to bring on the investors to come to Uganda here. So majority of the banks we have are international banks. They come from outside. And that is a blessing in disguise, in a way that they know what to do. They know what they are going to, what they are required to do here in Uganda. They are going to offer Islamic banking window. So, as you have said, that Somalia has joined the East African community just yesterday or recent. It's the latest country to join the East African community. I believe that there is too much market. There is a good market for Islamic financial products. When you look at Kenya, Islamic banking is already established there. Tanzania, even Rwanda, they are doing it already. So Uganda coming on board, and Somalia also, they are already having these Islamic banks. By the way, stronger, that Salam Bank is stronger in doing very well in Somalia. So we hope that it can be an opportunity for Islamic financial business to prosper in this region, and also to show the world, and also to show this community. You know, I believe that apart from Somalia and Comoros and others, Djibouti, other East African countries are Muslim minority countries. We need to show them that contribution of the contribution of Islam towards the financial sector. They are eager. They are wondering, how can we don't expect Muslims to be organized to that level? How can it be that they are also regulating, they are also having a banking system? So, Mr. Moderator, I think that is a quick update on that.
That is wonderful. From where I sit, I can see that you are full of optimism, you as a person, and the market is actually responding very well. Maybe to cross borders, I can maybe ask Mr. Hamed, the head of Islamic Bank at Absa, in regards to the growth. We understand that Kenya is actually operating on the basis of exemption, as opposed to what our people, what the market is in Uganda. Maybe can you give us the reason as to why it's growing, regardless of not having proper legal infrastructure, and maybe share with us the customer's perception or perspective actually in regards to embracing the market?
Thank you. Assalamu alaikum. I sincerely appreciate the opportunity to be part of the speakers in this meeting, and appreciate the fact that all of us have created time to be able to be part of the same. As regards to the growth of Islamic banking in Kenya, it was mentioned earlier that in the East African region, Kenya was among the pioneers. And I pride myself to be sitting in a bank that was the pioneer in Islamic banking. That is, those days it was Barclays, but now currently Absa. So around 2005, I think the legal framework was amended in the Banking Act to accommodate Islamic banking. Nevertheless, we may say that we are not at where we ought to be. There's a lot that needs to be done, considering that we have, as earlier mentioned, around 3 fully fledged Islamic banks, probably more than the rest of us in the industry, rather in the region, and quite a number of Islamic windows. But looking at the number of Muslims, bankable Muslims in this market, we still have a long way to go. We have a long way to go in a sense that the market share is a real concern for Islamic banks, and we need to do a lot in terms of making it even better. Because if you look at the conventional colleagues, they take more than 90% of the market share. Yet we have a huge population, Muslim population, bankable Muslims who still also bank with the conventional banks. So I think there is an effort that needs to be employed from all of us in the industry, players and practitioners together, to be able to push the penetration of Islamic banking. Looking at the perception, there are both positive and negative perceptions that are there in the industry. Positive perception means that customers view Islamic banking positively because it operates in accordance with the Islamic principles and Sharia law. That's a very positive perception. So this alignment on the ethical and moral values can attract customers who seek financial services in the industry because they're consistent with their religious beliefs. However, there are concerns as well. There's a huge misunderstanding about Sharia compliance among the customers, especially those who are not familiar with Islamic finance principles. So there needs to be a lot of education and transparency that can help address these concerns. The other perception is an issue of profit and loss sharing. It's a positive perception, so it will be able to attract quite a number of customers who appreciate a more equitable and participatory approach to finance. But the concern, again, from the same customers on this principle, that most banks in the Islamic bank space, it doesn't look like we actually have fully put into the profit and loss sharing principle into use, because customers feel that at times when they are unable to make payments and because of one reason or another, banks, there's no difference between the conventional banks and Islamic banks in the way we handle them. The aspect of interest-free banking is a perception that is good, again, because this is one of the key pillars of Islamic banks, and it attracts customers to us because of the prohibition of interest. But the perception, again, is some customers find it challenging to understand how Islamic banks generate returns. The question is, how do we make our money without the interest part? So most feel that the Islamic banking is a word that is choreographed by practitioners to just get their business in hiding in the name of principle, changing into profit. So that's a concern that customers have that we must also look at in a big way. As concerns matter, sorry?
Proceed.
Okay, as concerns matters of social responsibility, which is a key principle in Islam finance, again, as it was mentioned by the prof, I think it's one way that if we actually articulated it well and pushed it, is a way that will attract customers, because it's attractive to individuals who want to avoid traditional banking practices and avoiding interest. Again, the customers want to participate in socially responsible activities. But again, the perception again here that some customers also question the practical implementation of social responsibility in Islamic finance. There's also a misconception. They think that Islamic finance, as it is mentioned, should be free. We should be working like charity. So again, there's a question around that point. So one of the things that also needs to be a big concern from customers is the range of products that we have and innovation. I think the feeling among the customers is that we do pick products from the conventional shelves and dust them, give them a different name, and shower to them. So that has also been a big challenge in terms of penetration, because customers probably don't find a big difference in our product basket. They feel that we are just doing the same product the same way the Islamic banks are doing. So lastly, I think in consideration of Islamic banking and the perception of customers, we need to really focus on looking at the ethical considerations that are required by the Islamic banks. They still, because Islamic banking is ethical banking, customers feel that we are not very ethical, especially in terms of maybe recoveries and how maybe standing with them when they get into problems. The financial principles are not observed fully. Sometimes one of the challenges is that even we as practitioners or banks sometimes tell customers that we are more Sharia compliant than our competitors. So we participate in a way to tell the customer that maybe ABSA is better than any other competitor. I think that's one of the things that are really hindered penetration. So there's an issue of perceived, we need to also push the perceived trustworthiness because it's really missing in our institutions. We cannot be trusted. And again, the perception here needs to, then by so we need to do clear communication, education, and positive customer experiences that are key in shaping and maintaining the positive perceptions. Thank you, Dr. Khalid.
Thank you, Hamed. And you've talked about growth and everything. I just want to bring you maybe briefly to explain if by any chance, do you know any our market capitalization and any industry concentration in your offering, for example, as an institution?
Sorry, I didn't get the question.
I'm asking about market capitalization. By any chance, like you say that we are where we should not be as far as Kenya Islamic banking is concerned. By any chance, do you know our market capitalization as an industry?
To be honest, I don't have the exact figure, but I know we are under 2%, in comparison to the other conventional banks. So we are like 2% of the total market share and capitalization. Hence, one of the biggest challenges that we have in terms of taking up big financing facilities. Thank you.
Thank you for that. Maybe now I'll bring in Madam or Mrs. Saada. Maybe can you share with us your journey as Gulf African Bank? You've been in the market for over a decade now. And maybe what are your next area of progress as a bank?
Okay, thank you. Thank you so much, Dr. Khalid and Abrar Consult for organizing this particular event and also for inviting us to this particular forum, which I think is one of the key pillars that needs to anchor as we demystify what is Islamic banking and Islamic finance at large. So looking at our journey as a Gulf African Bank, Alhamdulillah, this year we will be celebrating our 15 years in the market. And it has been a journey that has involved a lot of support from our shareholders, from our Sharia board, which constantly guides us in terms of products and how we do things, from our customers and from our staff at large. Now, when I look at the journey that we have had, it has required us to be also innovative, bring products that can relate to the market, address the needs that the customers are having. For example, we were the first bank to launch the first Sharia compliant credit card, which rides on the principle of Ujra. And this really added value to our Muslim community that were interested in getting a Sharia compliant credit card, but they could not get that because there was none in the market. So this has been quite some of the things that we have done to just change the dynamics of the Islamic banking. We have also recently signed up with the African Guarantee Fund, where we do provide a Sharia compliant credit insurance scheme. And this again is to address the needs of our customers that are unable to provide us with security and still be able to cover that from a Sharia perspective. So the journey has been quite exciting, of course, with our staff along the way. And I liked what Hamed has just mentioned in terms of the demystifying of Islamic finance in the market. And it requires us also to have walked the journey with our staff, because this was a fast financing structure, fast way of doing things in the Kenyan market. And it required us to invest as a bank in development of our staff just to build that capacity. Looking at even some of the partnerships that we have done over the years and the stakeholders that we have brought on board, it has required us also to just align them to our Islamic principles and Sharia so that we are able to partner and also still educate them as a way and demystify it more in the market. Looking ahead, Alhamdulillah, we are on a trajectory growth. Right now, I think we are currently having a financing book close to 25 billion Kenya shilling and deposits of 34. We are looking at growing even into Tier 2 as an Islamic bank. Of course, we have others Islamic windows ahead of us, but we are looking at growing into Tier 2, leveraging on technology, leveraging on collaboration, partnerships with key stakeholders that all along have supported us, deepen those relationships, and see how we can grow the Islamic market, Islamic finance market at large. Thank you.
Thank you. And now maybe I'll bring in Mrs. Aisha and share with us possibly your insight in regards to Tanzania market. What are your views of what Islamic banking products are basically in Tanzania?
Assalamu alaikum.
Walaikum salam wa rahmatullah.
Thank you, Dr. Khalid. I feel honored to be part of the panelists. Thank you, Abrar, for this opportunity. Actually, Islamic bank products derive their value from the adherence of ethical and Sharia principles, operating accordance with the Sharia. These products, by avoiding the interest and engage in ethical and socially responsible investment, for customers who aligned with Islamic principles, banking with an institution like Amana Bank provide a financial haven that resonates with their religion beliefs. The unique value proposition lies in the promotion of asset-backed financing and provision of innovative and inclusive financial solutions. Like Mr. Ahmed has said, that we are facing different misconceptions that I don't want to repeat it due to the limitation of the time. But without forgetting to recognize the wide numbers of non-Muslims who are enjoying the product, Islamic financing product, such as financing, the bank by engaging directly to the business, such as using the Murabah working financing, it removes the funds diversion and add value to customers' business. It helps the client to achieve the desired goals. Thank you.
Thank you so much. I think you've also mentioned something to do with what you do as a bank in terms of ensuring Sharia compliance. Maybe I will bring in any one of you to answer this particular question in regards to awareness. And we've seen one of the audience initially actually posting a question in regards to that, in regards to awareness, that our conventional counterparts have done a lot on matters marketing their products. And maybe any of you can tell us about Islamic finance products, awareness and limited outreach of the services that you render. This has been a perception of the market that Islamic banks, and I'm sorry to put you on spot, the practitioners here, that you have not done a lot or as is expected in terms of marketing your products. What will be your response to this particular claim out there? Maybe I'll start with Hamid.
Thank you, Dr. Khalid. I think we are guilty as charged. In terms of what has been done, if you look at the period Islamic banks have done, especially in the East African region up to now, and the penetration levels, I agree fully with the thought that awareness has not been created enough. And in promoting and expanding the use of Islamic finance, I think it involves raising awareness, building the infrastructure, and creating an environment that is conducive to financial principles of Islamic finance. What we have done is that as part of the things that I have mentioned, little has been done by yourself, by the practitioners, or rather the practicing banks and institutions. because the awareness, you know, the challenge we have big way is that we have a challenge here. In fact, everybody you will speak to as a customer of Islamic finance, immediately we start discussing Islamic finance questions. They tell you, let me speak to my sheikh. But to what level does the sheikh understand Islamic finance? Looking at medical, for example, there is a doctor, normal doctor, there's a surgeon, there is a pediatrics and all that. So all our sheikhs have become Islamic banking experts. With due respect, you know, they could be half the Quran and all that, but the Islamic economy is not part of what they read in the madrasa and all that. So one of the things that has really hindered Islamic growth is that the people who stand on the forums, in the mimbar and all that, castigating and saying that there's nothing Islamic about Islamic banking are our own leaders. So we need to take a frontline approach in speaking to them, doing a lot of public awareness campaigns among the Islamic leaders to be able to do this. And probably looking at the size of Islamic institution that we have, it may be a very expensive affair. One of the run-on call is that we may need to put our efforts together. Different institutions, maybe putting a budget together and working on this together, because despite the business sense that comes out of this, we also have a duty to remove our Muslim brothers and sisters from riba. So this will be a tough question to all of us here, and those who are not here if it's not well done. So we need to do a lot of financial literacy programs for the imams and the scholars so that they can be able to do that. We can include seminars like this one, and thanks to Abrar, so workshops, media campaigns. We also need to, you spoke about institutions within this region. How many of them are talking about Islamic finance? You spoke about maybe in Kenya, in terms of university. I know Nairobi University does some, even UMA does it. You speak about diploma and all that. So you've quite a number of courses, even in our Islamic institutions, are on the conventional side instead of Islamic banks. So we need to do that. I don't know. Okay. There's also an aspect of conducive regulatory environment. Okay. Conducive regulatory environment. I think there is lack of conducive regulatory environment, that while some acts have been amended to accommodate Islamic banking, they're not extensive to accommodate some aspects like liquidity management, maybe a Sharia board that we have, like a unified Sharia board. One Sharia board member in my bank will say that the products of another bank are not so we need to have like what accountants do, lawyers do, what are the values that we need to look at, so that if we have a uniform Sharia board, especially speaking at our different central banks, then that will be a great support. And what's the incentive to that? That at least we shall have to increase penetration, speak with one voice, and gain market share. We also need to do a lot of capacity building in terms of in the universities and learning institutions, so that Muslim students and Muslim people learn a lot of these programs. We have very few people, and actually we do a lot of, if I'm hiring, for example, the only place I'll go to, and I have due respect to my sister Saada, I'll go to take people from her team. And what she will do, she will also go to take somebody from Khalid's team. So every day we are cannibalizing ourselves in terms of staff, because there are very few staff. So we need also to go out and maybe partner with the Islamic institutions to build capacity for upcoming staffs and all that, because some of us are already aging in the industry. And one of the things that has also been a problem now is about innovative products. There are quite a number of products in the conventional space that we don't have in the Islamic space. What will our customers who want these products, what will they do? They'll definitely rush and go to the conventional space. My problem where I sit has not been competing with Gulf, with Premier, with that. We have a number of customers, even within my bank, majority of them who come for products we do not have on the Islamic banking side, and yet they need them for their business to operate. So we need also to be very innovative. We have areas like wealth products. We do not have very many of us in the practice which have wealth and investment products for our customers. So they are forced to go to the conventional side as part of the Darura. That. Though we also need to standardize our products so that a product offered by any competitor Islamic bank is standard. So nobody will accuse the other to be more compliant than the other, and we shall increase penetration. Finally, there's also an element of, second last point is infrastructure development. Our technology
Make it last,
is one.
Hamid.
Okay.
Not second last.
Okay. Technology is one thing, so that we need to do a lot of integration to accommodate products in this space to increase that, while we do not have quite a number of them that can be accommodated in the Islamic banking space. Thank you very much, Dr.
Thank you, Hamid, and for that elaboration that you've made. And I've seen people raising hands, including your member of the panel, Dr. Suleiman. And before maybe you ask any question, I don't know if it's a question or a comment, I will want to pick from what Hamid had just picked in regards to capacity building. I know you are head of a department of Islamic finance at IIU. I would want to know your opinion in regards to the uptake of Islamic banking and finance specialization at your institution in particular, and what are the areas of focus that should Islamic finance education concentrate on, considering what is going on in the market? Thank you.
Thank you, Doctor. Precisely in leg, just 1 minute or two. In Islamic University in Uganda, yes, just 1 minute. Islamic University in Uganda, we are privileged. We have just put our foot there. In fact, we are not even 1 year old in this field of Islamic banking. A bank has just been licensed in Uganda. But we have rolled out courses. It's not a problem in Uganda. We have a diploma in Islamic banking and finance, a bachelor's Islamic banking and finance, master's Islamic banking and finance, and we have rolled out a PhD. Now we have a PhD in Islamic banking and finance. A student does not need to go to Malaysia or go to Saudi Arabia or go somewhere. We have all the courses here. But the problem I see, I'm envisaging in Uganda, I don't know, in Kenya also, it is still the problem. Customers are now saying, you have not come out to bring to us these products, how they are going to operate. Now we have done our best. Universities have rolled out. A bank has been licensed. Now, for me, I envisage the biggest task being also on the customer. This is your own. Islamic banking is your own. How do you compare me with ABSA or with a Standard Chartered Bank or Stanbic Bank, which has been very large, the largest bank in Uganda? How do you compare the Islamic finance operation, which has just rolled out 1 week or 1 month, with someone who has been there for a long time and is making billions and billions? So we just need to adopt Islamic banking as clients. We look at Islamic banks as our own, we support them. We have a bank here in Uganda precisely, which is Catholic-owned, Christian-owned, and all Christian institutions are banking, are affiliating to it. They are looking at it as their own. This is not the case with the Muslim community. The Muslim community, they want you to go and give them incentives. Please adopt Islamic banks as your own. It is your own. Why don't we behave like our Christian counterparts? They have their own banks and they are supporting them, even if there are no incentives, even if there are no commercials which come on televisions or in the media. So look at Islamic banks as part of your deen. But if you come out to challenge, just like chefs, you have said in Kenya, even in Uganda here, some chefs are challenging it. They're saying that there is no difference between Islamic and conventional. Now we are calling people to go to riba. So that is a challenge you are calling us.
Thank you.
Yes.
Maybe I'd like to bring Mr. Saada on this. You've just mentioned something to do with the Gulf and technology. and also being innovative in one way or the other. I would want to know from your end, because you see with technology, basically you have both positive and negative implications. What do you think about Islamic finance in terms of leveraging on technology?
Thank you, Doctor. First, I'd like to echo in terms of the Islamic awareness and bringing technology still as a function that we can still use as Islamic banks to position and educate our customers, educate the public, and just put it outside there. I know it is a journey. We have been going through that journey for the last 15 years of existence. And it doesn't come easy, this being a new way of doing things, especially in the Kenyan market. And it is still evolving. And if you keep in mind that we need to bring that regulatory collaboration between the regulators, the academia, what Dr. Suleiman was talking about, and bring that in place, then we will be able to make that leap. Yeah, but we have to be very deliberate in terms of how we do the education, how we do it in our plans as a bank. I'll give an example. For example, with us, we do have even a calendar of education of what we are going to undertake throughout, and even have like simple Sharia clinics within the branch network. Yes, you might think of the bigger movement when we come together, but in our own small capacities, Dr. Suleiman, don't feel alone being in Uganda, but in your own small capacity, how do you still demystify that? And now bringing it into fintech, which what Khalid is asking, this is now another thing that is really coming up, and we cannot be left behind and say, because we are an Islamic bank, I'm only 15 years old, I cannot adapt to the fintech world, because fintech brings quite a bit of diversification, and also customers' needs are changing. Customers are preferring convenience. Customers are preferring faster decisions. They want a good experience, and we cannot be left behind as Islamic banks saying we are still evolving. So I think it's an issue of looking at that opportunity, identifying the right partners. There are so many fintechs and that are coming up in the market, but who do we identify with that we can go and partner with, develop products with them that are still Sharia compliant, and it does not disadvantage us as Sharia compliant banks, because the digital shift is there. Yeah, thank you.
Thank you. I'm actually running out of time. I have 5 minutes. Maybe I would want to bring Mrs. Aisha here on matters innovation and maybe fintech. Maybe can you share with us two or more, maybe one or more, let me put it that way, of your understanding innovative product offered by an institution in Tanzania, that we can say this is innovative and at the same time Sharia compliant?
Thank you, Khalid. Actually, in our bank, we have introduced two products. Actually, there are many, but I'll just mention two. First is Elim financing. Elim financing is aimed at easing the burdens for parents and higher learning students through the use of service hijara. And we were able to accommodate various needs in people obtaining education. And this has been the first, Amana Bank has been the first to introduce Elim financing in Tanzania. The second innovation product is Halal Pesa through mobile banking. After introducing mobile banking, which allow clients to deposit and withdraw money whenever they are, it was extended more by introducing Halal Pesa, by partnering with the mobile money operator Vodacom to allow clients to save money in their wallet and to gain profit in their investment in a halal way. Thank you.
Thank you for that. And maybe to conclude and to give each and everyone space to say the last statement or closing statement, basically, I'll start with you, Aisha, before you leave. Maybe what are your thoughts on the future of banking and Islamic banking in Tanzania, considering that you have already initiated Halal Pesa? I believe whatever we're using is not Haram Pesa. just to make it clear for the audience, maybe you can give us your future thoughts on where we are heading to. Thank you.
Thank you, Khalid. The future is promising, and the development of other sector of Islamic financing, such as Takaful and Islamic capital marketing, capital market will propel the growth of development of Islamic banking. The only thing that we need right now is the regulatory framework, which we believe it might take time. But at least government should adopt issuing of sovereign sukuk and other governments want to people to be able to understand and create awareness, and at least to promote Islamic financing and Islamic product while we are waiting for the Islamic regulatory framework to complete, since it involves multiple stages, and we believe it's yet to come in this year or next year. Thank you.
Thank you. Saada, please, your thoughts?
Okay, just to add what my colleague has said, Aisha, we also need, in terms of building that governing body that can oversee and support us also in terms of demystifying. There is need for more investment opportunities for Islamic banks, because we are limited there as banks, especially when it comes to liquidity management. It's an area that we need to really see ourselves develop. But the opportunity for us as Islamic banks, I think the cake is quite big for all of us to participate and gain that. Yeah, thank you. You are on mute, Khalid.
Okay, sorry. Dr. Suleiman, your thoughts, please. Thank you, Saada. Dr. Suleiman, you're on mute.
Yes, sir. Yes. Yes, thank you for this opportunity, but I just want to emphasize what I said. We have done our best. Our countries have done their best. I think Kenya has done also its best. Uganda has done, and as government, to roll out. Now customers should come and embrace Islamic finance and consider it to be owning it. They should own it also. The challenges we need to sit together and solve those challenges, and also call upon the GAF African Bank now in Kenya, Tanzania. You can come and open up windows here. We don't need banks to come from, for example, from Malaysia, from London to come here. When you, our neighbors, you are here, why don't you come and open? This market is very, very fertile. It's very, very virgin. You come and open up. There is great business here in Uganda.
Thank you. And lastly, but not least, Mr. Hamed.
Thank you. I think the success of promoting Islamic banking involves a combination, in my view, of one, regulatory support, public awareness, innovative product development, as well as collaboration among the players. There's a lot that we blame the government, the regulators, and all that, but there's much that we can do within ourselves to enhance the penetration of Islamic banks. And I can tell Brother Suleiman Luja that as I champion Islamic banking at ABSA in Kenya, we are walking into Uganda very soon. So I think by inshallah next session we'll be talking about an additional window in the Islamic banking space, because I already started discussions with our ABSA colleagues in Uganda. Thank you very much for the opportunity, colleagues.
Thank you so much. I think we appreciate you giving us your time to explain all that we have asked you. And I'm also looking forward to have whatever has been promised here, to see ABSA opening shop in Uganda, and maybe Uganda companies coming to Kenya to do that. And maybe also looking forward for Abrar to continue doing this, not only with people from Tanzania and Uganda, but also, since we are having other members joining East African community, should be having panel members or presenters basically from DRC, Rwanda, and Burundi. It is our responsibility also, as we talk about awareness, to actually ensure that those jurisdictions also embraces Islamic finance. Without taking much time, I know we are late, we're not doing well on matters time. May I take this opportunity to thank each and every person who has participated and the audience at large, and also to thank Abrar Consult for giving us this opportunity, and also the organizers, basically. May I take this opportunity to say, Jazakumullah khair. Back to you, Fatma. Assalamu alaikum wa rahmatullah.
Wa alaikum salam wa rahmatullah wa barakatuh. Thank you so much, Dr. Khalid, and all the panelists. We really appreciate it. It was an informative discussion. Well, ladies and gentlemen, we are in our fourth activity that will be on financial technology, fintech, its application in Islamic financial institutions, that will be held by Professor Aisha Muniza.
You have muted. Please unmute.
Oh.
Yeah.
Sorry. Well, Dr. Khalid and panelists, thank you so much.
You can introduce Professor Aisha. That's okay.
Okay. Professor Aisha is one of the key founders of Islamic finance in the Maldives. She was the first female deputy minister of the Ministry of Islamic Affairs and the first chairperson of the Hajj Pilgrimage Fund of Maldives. She has published books and numerous articles on Islamic finance, and her research areas include legal studies and corporate governance applicable to Islamic finance. She sits in Sharia advisory committees of financial institutions offering Islamic financial services. She has won numerous national and international awards for her service in the Islamic finance industry, including the Henry Award, the highest award conferred to women by the government of Maldives. Professor Aisha, she's also a role model and a mentor for females who aspire to build their careers in the Islamic finance industry. She is listed in 2017 as number 7 among the 50 influential women in business and finance by ISFIRE, which is an official publication of the Islamic Bankers Association based in London. And she's also among the most influential 500 in Islamic economy. She is a member of the Association of Sharia Advisors in Islamic Finance in Malaysia. I would love to warmly welcome Professor Aisha.
Thank you very much. Should I proceed?
Yes, please.
I have 1 hour, right, for the presentation. Thank you very much. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wa salatu wa salam ala ashrafil anbiya wal mursalin wa ala alihi wa ashabihi ajma'in. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu. It's a pleasure to be here in the second East African Islamic Banking Virtual Forum. I'd like to first of all thank the organizer for giving me this opportunity to be here to share on this important topic, which is financial technology, fintech, and its implications for Islamic financial institutions. Now, we all know that even I was privileged to hear a little bit of the previous discussion you had in the panel. We understood the importance of technology. So fintech is short for financial technology. It has a transformative force within the financial industry, whereby even in Islamic finance industry, we see that technology is being used in each and every operational aspect of it. For instance, it could be to automate the documentations used or it could be to improvise the products which are being offered to the public, or it could be to improve the customer experience or services provided, or it could be even in case if a customer default and when the matter is taken to the dispute resolution stage. Even at that stage, we see nowadays even Islamic financial institutions using technology to ease their affairs. So what we understand is that fintech is part and parcel of the operations of Islamic financial institutions today because of the advantages it provides. For instance, the whole processes can become efficient, it could be more accessible, and we can also achieve Sharia compliance through the employment of this technology. We see various types of technologies being used by the Islamic financial institutions today. Among them, artificial intelligence or AI technology is one of the technologies that is being used even for basic services provided by the Islamic financial institutions. For example, nowadays for customer care services, the use of chatbot is very widespread. Likewise, in Islamic finance, it has been always criticized since its inception that we always rely on debt-based Sharia contracts such as murabaha, commodity murabaha, or tawarruq, and we neglect the equity-based contracts such as mudaraba and musharaka. But with the technological advancements, we are able to mitigate the risks involved in equity-based contracts and use them in a convenient way without causing any side effects which are adverse to the institution offering it. So one of those innovations we see is the Islamic crowdfunding, where we have the opportunity to mitigate the risks and engage customers in such transactions to provide benefit to all. So I believe that today it would be very difficult for us to live without fintech solutions or innovations, as it has become part and parcel of it. This has been accelerated due to COVID-19 pandemic, where we've understood that without technology, we have no future. Now, when it comes to the relationship between fintech and Islamic finance, there are people who ask this question: is fintech innovations always beneficial, or should we rely on them? Is it a necessary requirement for them to rely in all cases, or are there any instances in which we should avoid from fintech application? The truth that we cannot deny is that, of course, fintech is important. It provides a lot of benefits and ease to all the stakeholders involved in Islamic financial institutions. And in some cases, especially in some jurisdictions where the basic infrastructure to use technology is there, it is essential to use them. But with the collapse of Silicon Valley Bank, for instance, we've understood that technology is a double-edged sword, meaning that it can provide benefits. At the same time, if we don't take precautions, if we don't have risk mitigation mechanisms put in place, then the advantages could be lesser than the disadvantages we may have to encounter. For instance, in this particular Silicon Valley Bank's collapse case, we understood that the customers were able to withdraw a large sum of money, which is 42 billion US dollars, within a single day. Okay, without the technology, without having the fintech innovations, without relying on those ease, this could have not been so much possible. So we understand that since technological innovations have to be used with caution, we have to put proper risk mitigation mechanism place in the Islamic financial institutions when we rely on them. It is not like something which we just can use at any time in any way we want. No, there should be risk mitigation mechanisms that we have to focus in this as well. Now, let's look at the opportunities provided by fintech to Islamic finance. Number one, we cannot deny that fintech provides Islamic finance the opportunity to be more financially included environment in countries. Okay, so when it comes to financial inclusion, we are talking about those who can access to finance but does not have the opportunity to access to it because of the barriers it has. For instance, imagine the investment opportunities which a person living in a forest area would have compared to those who are living in a city. So in that instance, using USSD code through a mobile phone, if we can let them invest in a financial instrument, whether a sukuk or a bond, then definitely they will be able to invest their money and get the advantage of it without physically coming into a city area where all the financial institutions are physically situated. Likewise, for instance, Maldives is a country which is 100% Muslim country where I come from. We have 1,190 islands, and about 200 islands people are inhabited, and we are unable to provide all types of financial services in all of the islands because of the geographical barriers we have. And with technology, without people spending money to move from one place to another to get these services, while they are in the islands, they are able to even transfer money from one account to another account. They are able to get financing facilities, and moreover, they are also able to enjoy facilities or the services which are given by the financial institutions in an online platform. So through these mechanisms, at least we are able to let people who are unable to physically reach to the branches of the financial institutions to enjoy the services offered by the financial institutions through online platforms. So this is one aspect of financial inclusion. The other aspect would be those who are marginalized, unserved or underserved segment of population. For example, those who are living below the poverty level. In Malaysia, we call it bottom 40 or B40. And those who are unable to have collateral requirements such as nano or medium enterprises, they're unable to access to financial institutions and get financing facilities because of these types of barriers. So through technology, we are being able to cater this unserved and underserved segment of the population so that they can get a financing facility which is affordable and customized to them. Next is compliance with Sharia principles. Now, sometimes we wonder what are the mechanisms through which we achieve Sharia compliance in a financial institution. Now, when it comes to Sharia governance, well and good, we understand that certain Sharia organs need to be kept within the financial institutions to ensure that Sharia compliance is achieved. And through the establishment of Sharia committees or Sharia supervisory boards, within the financial institutions, we try to achieve this. Now imagine if an institution is formed in 1970s, up until now, how many Sharia opinions would be there in that financial institutions which they need to follow, which is given by the Sharia supervisory boards or the Sharia committees? It would be a lot. And imagine a situation for number of times the members sitting in the Sharia committees will change over this period. Some would have died by now, or some would have changed the institution or the field, or some would have retired. New faces will come in. But what we understand is that irrespective of changing of the members sitting in these Sharia supervisory boards or Sharia committees, you still have to stick to the Sharia opinions given by the Sharia committee or Sharia supervisory board as the organ of the institution without failure, because we don't look at who gives it, but as an organ, what they give is what we have to follow within the institution. So in this case, how do we ensure that this big chunk of information or data is disseminated to all members in a fair manner where they could read it, they could understand it, and they could apply it in their decisions within the Sharia committee as well as within the financial institution? So using artificial intelligence or any other type of technology, we can ease this. We can ensure that they don't have to manually go through the Sharia opinions, but instantly using a keyword search, or whenever they want to refer to the historical data, they could refer to it without going physically to find that information or retrieve that information in a manual way. So this is one of the advantages we have with technology. Another advantage is confidentiality related to Sharia compliance matters. Now, imagine if there are a lot of documents which are shared through email or other means to Sharia committee members, and if the institution is worried about the confidentiality or leaking of data, they could still have a platform whereby the interactions could be controlled, and through that platform, all the information that needs to be disseminated to all stakeholders, including Sharia committee members, could be done. And this is something which is being implemented right now in the market, which is very good. Why? Because at the end of the day, we want to ensure that Sharia compliance is achieved, as well as we maintain the confidentiality and we have ease in communication instead of waiting for 14 days, 7 days for people to communicate. When you have a platform instantaneously, you could pass the message and people could interact. So these are some of the examples in which we could achieve higher Sharia compliance level through technology as well. Another angle which I could put is whenever we conduct Sharia review or Sharia audit, we understand that there are certain non-compliant activities happening in the financial institutions. Imagine a simple commodity murabaha transaction. First, the institution needs to have the asset before it is sold to the customer. So in this case, imagine a situation due to human error, because we don't have a sophisticated system in the financial institution. The second transaction happens first, that is the institution sells the commodity to the customer before it owns it. In Sharia, you can't sell what you do not own. So therefore, this transaction will be considered as a Sharia non-compliant transaction. And in order to mitigate these types of risks happening, we can rely on technology. How? One of the innovations we've seen in the recent years is within nanoseconds, you can seal or you can conduct a commodity murabaha transaction through STP or straight through process. So when we employ these types of technological innovations, we are able to lessen or mitigate the human errors and have the Sharia contracts being concluded in the way it should be without having any manual errors that might occur in between two independent transactions. So I believe that these are some of the examples that show that technology is really good if it is used for good purposes or achieving good, like in the financial institutions, if they want to adhere to Sharia compliance, they could do so as well. Next is efficiency and cost reduction. Obviously, this can vary. There could be some arguments whereby some people could take some specific cases and say, in this particular case, when we use technology, the cost is not reduced, but rather it's the opposite. However, generally, it can be said that digitalization which would ensure that certain level of automation is achieved. And because of automation, in future, even though initially you might have to incur some cost, but later on, once you put the technology in place or in system, then you would enjoy the advantages, and over years you can see the good result as well. So for instance, we are talking about sukuks. So when it comes to sukuks, we all understand that if it is a classical sukuk which is issued in the contemporary times, the amount of paper required to do such a transaction. Manually, if it's handled, firstly, when we initiate the sukuk, the number of documents that needs to be submitted to the regulatory authority is a long list, and it is very bulky documents. Likewise, once the sukuk is issued, even the information memorandum or the prospectus that we need to share with the investors, it is huge and it involves a lot of papers. And this means that the cost of printing them is also very high. And finally, when the sukuk is closed, we have to engage in periodic reporting. And if the periodic reporting is done in a manual way, again, it becomes a costly matter. Now, if you digitalize the platform in which the sukuk is issued, for instance, instead of manually submitting the documentations, if the regulatory authorities allow you to do it through a system, and once the corrections and everything is done, again, through a digital platform, if the sukuk can be issued to the investors, then the amount of paper involved and the cost involved in the transaction can also be reduced. And we've seen that blockchain technology has been integrated with sukuk as well. For example, in Indonesia, there is one company called Blossoms who has issued the world's smallest sukuk, which is for only USD 50,000. And they've used a blockchain-based platform successfully, whereby even the Sharia contract which they used is based on equity, mularaba, which we are trying to promote in our market, irrespective of the type of Islamic finance segment. So I believe that there are many more other examples that could illustrate efficiency and cost reduction. And this is a point that will vary depending on the legal and regulatory frameworks which we follow in the jurisdictions. Because what we found out is that even if we use a digital platform, if the regulatory authorities doesn't allow us to minimize the intermediaries involved in a complex finance transaction, then having a digitalized platform might be more costly than not having it also. So this is also a trend we have seen in the market. Next is transparency and accountability, especially when it comes to Islamic social finance mechanisms. This is a concern we have a lot, because when it comes to Islamic commercial finance transactions, we understand that there are regulatory authorities who are the watchdogs, who ensure that everything happens in the manner they've prescribed. But when it comes to Islamic social finance, unfortunately, in most of the jurisdictions, still we don't have regulatory authorities, and they don't supervise or regulate what these entities are doing, and therefore people are scared or reluctant to give money or give donations to some of the entities, simply because there's no transparent or accountable way in which the donors will know what exactly is happening to their money given to these platforms or organizations. So therefore, when we try to leverage on technology, Islamic social finance has blossomed now in the world, because through technology, we understand that people can trust the platform, people can see what is happening to their money, people know that when they give the money, the impact they are creating. Because of that, people would like to engage more in these types of platforms. And one of the examples would be crowdfunding platforms. For example, in Malaysia, we have Global Sadaqah, which is a reward-based or donation-based crowdfunding platform. And using the platform, people understand the campaigns to which they are putting money in, and they also understand the impact they create, making it much more comfortable environment to interact, rather than just writing a check and giving it to an entity who doesn't report to them later on by stating what happened to their money. And of course, for risk management also, technology plays a vital role, because sometimes, let's talk about Sharia risks, for example. If we talk about Sharia risk management, if we can automate certain transactions happening in the bank, then when it comes to mitigating Sharia risk, we enjoy the benefit of it. Next is wider product range. So obviously with technology, previously we were not able to use equity contracts so much, but now we can mitigate certain risks, and we are much more comfortable to use Mularaba Musharaka using technology, so that at least both parties can enjoy the benefit of it. Global reach, as I told you, using the Maldives case study, if the islands are segregated or scattered all over the sea, and if you cannot physically go from one island to another, you can reach to the financial institutions without doing that, and it can be done in the global context as well. So today, if we want to donate money, or if we want to interact with a financial institution, we don't have to physically go there. Through internet, through the platforms these financial institutions have established, we can talk to them, we can get their services, and we can enjoy the benefits as well. Regulatory compliance, of course, RegTech is also something which we talk about right now. However, the truth is that regulatory compliance has also become much more easier with the technological innovations we have. There are certain types of platforms or even softwares that we could employ specifically for regulatory compliance purposes. And when we use them, we don't have to manually monitor the transactions, but we could collect the data and we could analyze them and even have our reports prepared on the spot. Now, after saying all these things, the question obviously that we need an answer is fintech halal or haram? Okay, so the answer for this question is also quite easy, because fintech has no religion. As long as it provides good or benefit to the society, then it can be used. And what we need to do is just to set the parameters which are consistent with Sharia, so that whatever we do using fintech will be within the ambit of Sharia as well. Therefore, in my opinion, when we say Islamic fintech, it doesn't mean anything at all. Fintech is fintech, meaning that whatever the technology we use in the financial institutions or with finance should comply with the Sharia parameters set for those transactions, as long as this parameter setting is followed, and as long as the innovation we create do not cause any harm and do good to the society, it is something which can be used. Okay, so from a maqasid al-Sharia perspective also, this is something which we can do. Now, let's look at what we have achieved so far. Of course, global data is also there, but we have some issues when it comes to getting the accurate global data for this. So I'm just taking a case study here, the case of Malaysia. So you can see from this slide that there are different varieties of technological innovations that we have adopted today. And if you look at the types that we employ, it varies from AI data, crowdfunding, digital banking, PropTech, blockchain, wealth tech, insurtech, remittance, and unfortunately, what we can derive from this slide is that we are still developing this sector. We are still at the experimental stage. For some type of technologies, we want to employ more, but I think it's just a matter of understanding how we could apply them effectively to the Islamic financial institutions or Islamic finance per se, and getting the advantage of it. Okay, so again, this is the FinTech Map 2023 for Malaysia. We see a wide range of FinTech companies operating. We see for remittance, for payment, but these are not necessarily Islamic finance offering companies or institutions. Now let's look at the overview of OIC companies when it comes to employment of fintech. We can see that obviously there is a gap in this regard. It is reported that with a market size of $79 billion in 2021, projected at $179 billion in 2026, and 375 Islamic fintechs globally, the Islamic fintech sector is showing signals of maturity. So we cannot say that we are at a stage where we have experienced all and we have confidence in using fintech. Slowly, we are embracing it, but there is a lot of potential in it. So let's look at the potential. The question is, are we doing enough? So from this slide, we understand that there are untapped markets, untapped technologies as well. And therefore, we need to do more when it comes to embracing these technologies and adopting technology geographically and institution-wise as well. Okay, so let's look at the potential. So from the previous two slides, I have put the potentials, the areas where we could focus more. For example, when it comes to region, we understand that there is a lot of potential or opportunity to employ technology and innovation in South and Central Asia, North America, MENA and other regions, Sub-Saharan Africa. So these are the regions where we see that there is a lot of potential there, but we need to focus and do more work to adopt technology and innovation. Sectorial-wise, we find that capital markets is one of the area we can focus, because there's substantial potential for innovations in trading platforms, digital asset management, and blockchain solutions. For Takaful, also, we see that we need to focus, ripe for technological transformation to streamline operations, underwriting, and claim processes. And obviously, for social finance, we see a great potential to embrace technology in zakat, waqf, sadaqah, microfinance, and social takaful as well. So when we talk about social finance and employment of technology, we need to understand that we are not talking about only using the technology for fund collection. Okay, fund collection should not be the only KPI of these Islamic financial institutions who are offering social finance. At the same time, they should also focus on how to, number one, locate the most deserved recipients of the aid. Number two, how to deliver them the money or in-kind assistance in in an effective way without these people coming to them and begging or asking for it. So I think we can use technology in a great way to achieve maqasid al-sharia or objectives of sharia in social finance. So one of the innovations which I have seen, which is very good, is using Internet of Things. It seems that we are able to determine the household poverty level. So if this is the case, why can't the Islamic social financial institutions spend some money or invest on gadgets that could collect the data and give this type of gadgets to those who are seeking aid? So once they take the gadgets and go home, the data collection could be done, of course, with the consent of the persons asking for help, and then without them multiple times registering as those who need aid, with one-time registration, the Islamic social financial institutions will be able to understand the household poverty level, and if they are getting any signals of poverty, immediately the assistance could be transported to those who are in need without them physically coming and asking for that help. So I think it's very, very important that we explore these types of innovative ways to help those who are in need, who are marginalized in our societies, who are unserved and underserved segments of our population, because we cannot achieve socioeconomic justice by marginalizing them. We should strive to help each other in the societies. Now, let's look at the relatively less explored in terms of technology. Now, we found that wealth management is one of the areas we can focus, because there is potential for personalized and tech-driven solutions in wealth management. We are talking about, for example, Islamic will. We're talking about how to manage the funds which a person has during his lifetime, with the concept of wasiya embedded in it, with the concept of fara'id embedded in it. And today, I think this is something we have to think about, because Islamic wealth management is an emerging area right now, which a lot of us have not explored it as part and parcel of Islamic finance. So let's look at the next. So what I believe is that what we need to do when it comes to fintech adoption in Islamic financial institution is to come up with a roadmap for future that will guide us on what can be done in this area. Because if we don't know what we can do, if we don't know the potential of employing fintech and the modus operandi of doing it, it becomes rather an obstacle for us to achieve it. But if you understand what can be done and how to achieve it, then it's much more easier. So in my opinion, what we need to do is we need to divide the use of fintech to phases depending on the development of Islamic finance sector in the respective country in which they want to apply digitalization or fintech innovations. So in phase 1, we can focus on digitalization and accessibility. Phase 2, data-driven decision-making. Phase 3, secure and ethical transactions. Phase 4, enhanced financial services. And phase 5, ethical asset management can be focused. So when it comes to phase 1, of course, there is no restriction to employ any technology we want. Just for illustration purposes, I have included blockchain technology, fintech platforms, and artificial intelligence. Okay, so for instance, if we are talking about utilizing blockchain technology, we can utilize blockchain technology for transparent and immutable digital ledgers. What would be the benefit? Enhance transparency, secure transactions, and prevent fraud. Example, blockchain-based sukuk issuance. What are the sectors in which we can employ this technology? Any financial institution dealing with Islamic capital markets, Islamic banking, takaful can do so depending on their need. So when it comes to opportunity, it has the potential to revolutionize sukuk issuance and trading, reduce cost and increasing accessibility to a wider investor base, enhance traceability of assets in Islamic banking and takaful as well. Next is a fintech platform. We can develop user-friendly mobile apps and web platforms for easy access of Islamic banking and financial services. The benefits would be enhanced accessibility, convenience, and customer engagement. We can use this in Islamic banking sector, takaful and zakat and waqf sector as well. It has the opportunity to reach a broader customer base, especially in underserved regions, improve customer loyalty and trust through user-friendly interfaces. But one thing, of course, there are prerequisites for using these types of technological innovations. For instance, internet could be a prerequisite. Next is artificial intelligence. Implement AI for customer service automation, personalized financial advice, and Sharia compliance checks. The benefit would be improve efficiency, reduce cost, and offer tailored services. For Islamic banking sector, takaful, and microfinance sectors, we can use it. It has the potential for AI-driven customer service to enhance customer satisfaction and expedite issue resolution. AI-based risk assessment can lead to better loan approval rates in microfinance. That is, if you are using Qarud, for example. Phase 2, data-driven decision-making. The technology that could be used is, for instance, big data analytics to analyze big data to gain insight into customer behavior, investment preference, and market trends. The benefit would be enable data-driven decision-making and customer-centric services. The sectors in which we can use this is Islamic banking, takaful, and Islamic capital market. It has the opportunity to offer personalized Islamic investment solutions and improve risk assessment in takaful, utilize data to identify emerging market trends in Islamic capital markets. RegTech can be employed to automate compliance with Islamic finance regulations and Sharia governance. The benefit would be to ensure regulatory compliance and reduce non-compliance risks. We can use this in sectors like Islamic banking, takaful, and Islamic capital market. It has the potential to streamline Sharia compliance, improving the efficiency of audits and reducing non-compliance risks, facilitate adherence to evolving regulations. And we can also use smart contracts to develop smart contracts could be developed based on blockchain to automate and to have the Sharia compliant transactions more transparent. The benefit would be it will enable secure and enforceable agreements without intermediaries. So again, here, if the regulatory authorities gives the flexibilities to reduce the intermediaries involved, then this could be possible. The sectors could be, again, Islamic banking, Takaful, and ICM. It will provide the opportunity for self-executing Sharia-compliant agreements to reduce transaction costs and enhance transparency, streamline processes in the issuance of Islamic financial instruments. Phase 3 is secure and ethical transactions. We can use biometrics, so we can implement biometric authentication, example, fingerprint or facial recognition for secure and convenient account access. It will enhance security and streamline customer authentication process. We can use it for Islamic banking, Takaful, and microfinance as well. And it has the potential to strengthen security, reduce fraud, and streamline account access in Islamic financial services, improve customer trust and safety. So one of the case study which I could share is in the refugee camps, they don't have any type of documents to verify the refugees living in there. So when the aid is given to them, it's difficult to distribute the aid without such verification documents. So the market has already developed the usage of iris-based ATMs to validate the identity of these refugees and to give them cash using the machine. So we understand that in some instances, technology plays a very vital role in providing justice to those who are denied of any type of assistance, and refugees are one of these instances. Next is cloud computing. We can adopt cloud-based solutions for scalability, cost effectiveness, and accessibility. It will reduce infrastructure costs and facilitate remote access to service. We can use it for Islamic banking, Takaful, and social Takaful sectors. It provides opportunity for Islamic banks and Takaful companies to reduce IT infrastructure cost and provide remote services to client, enhance business continuity. And phase 4, enhanced financial services. Robo-advisors, again, this is not something completely new to Islamic finance. We can use that to deploy AI-driven robo-advisors for personalized investment advice and portfolio management aligned with Sharia principles. It will offer automated compliant wealth management solutions. We can use it for Islamic banking, Islamic capital market sector. It will provide the opportunity to offer Sharia compliant investment advisory services to a wide range of clients, promoting ethical and profitable investments. Next is crowdfunding platforms. We can establish online crowdfunding platforms to connect investors with Sharia compliant projects and businesses. It will facilitate fundraising for ethical and sustainable initiatives. We can use it for Islamic social finance, zakat, and waqf. It will provide the opportunity to promote zakat-compliant crowdfunding for charitable causes, social development, and business ventures as well. Next is mobile payments that will enable mobile payment solutions for quick and secure transactions, including peer-to-peer transfers and merchant payments. The benefit would be it will enhance transaction efficiency and user experience. We can use this for Islamic banking, microfinance, and social Takaful sectors. It will provide secure, convenient mobile payment options for Islamic banking, microfinance, and social Takaful beneficiaries. Again, we are already using these forms. Final phase is ethical asset management. So here we are talking about Islamic supply chain management. We can implement blockchain technology and the Internet of Things for Sharia compliant supply chain tracking and transparency. green technologies to explore environmentally friendly technologies and investments that align with Islamic values, digital identity to secure to have a secure solution to verify the eligibility of beneficiaries and track their use of charitable assets, IoT, Internet of Things, deploy IoT devices to monitor and manage assets efficiently, such as waqf properties and charitable goods as well. So I believe that there are a lot of potential here. Now, obviously, the next question would be, do we actually need a roadmap, or why can't we just move ad hocly? Whenever there is a need, can we just employ it? So I believe that we need a strategic direction, and having a roadmap will create more efficiency. And we can also innovate acceleration by having a conscious decision to adopt it. And collaboration is very important, because already fintech is a collaboration between the technological firms and the financial services offering institutions. And therefore, we can have a competitive advantage in this regard. Now, obviously, from a practical perspective, we need to understand how we can apply the roadmap for different countries. Obviously, for each and every country, depending on their growth of Islamic finance sector and technology, they have to determine how to customize it to the local context. And of course, when it comes to enabling framework, it is also important for the countries to determine at what stage they are in terms of legal and regulatory frameworks applicable to technology adoption. For instance, if you don't have a Data Privacy Act, and if you have technologies already, like, for example, Internet of Things, where you have to collect a lot of data and it could be used for any purposes, the customer protection is not there. So without customer protection, it would be hard for customers to have faith or trust in the financial institutions who are using those technologies. Therefore, enabling infrastructure is very, very important. And if you don't have cybersecurity laws, and if you can't protect the parties who are involved in a digital platform using the legal and regulatory framework, then the confidence level of the parties or the stakeholders involved will be adversely affected as well. Okay, so there is no doubt that for each and every country, we have to think through it and see which one is more suitable for them. So coming from a small island nation, for example, the Maldives, I understand the issues. The countries, without having the basic infrastructure required for technological innovations to be adopted, it could be a real issue. For instance, in the case of Maldives, what happens is, even if you want to do an online transaction, there is a limit imposed in Visa or MasterCard offered by the local bank. Because of that, one of the local banks offers such cards, and most of the population will be having account with this bank. And because of that, they won't be able to do online transactions, even if they want to do. So these barriers will inhibit the product innovation using technology. And even if the financial institutions want, without the help from the other regulatory authorities, it cannot be pursued. So therefore, infrastructure development, having public-private partnership, capacity building, leapfrogging, international aid and collaboration could help if there are no sophisticated framework which are put in place for this particular purpose. So let's look at the conclusion. Is it more effective to start with the technology and then identify the needs, or should we begin by identifying the needs and then seek the appropriate technology? Obviously, there is no ready-made answer for this. In my opinion, it's important that we identify the specific needs first, and if those needs can be resolved through the usage of technology, then we can adopt it, so that at least we understand that the reason why we are applying technology is not for the sake of applying it, but to provide ease to people. Having said that, it is also important that we look at the potentials of technology, the usage of technology in Islamic finance in future. So today, as we speak, we are talking about helping those who are in need, the marginalized population, unserved and underserved segments of the population. So one thing which I want to highlight before I conclude my presentation is that time has come for us to think about creating Islamic social stock exchanges using digitalized platform, NGOs, to raise money using different types of Islamic social finance instruments or sophisticated financial products like using sukuk or whatever markets as well. This mechanism, at least we can help the underserved and unserved segment of the population, and together we can make a difference. And this is one of the innovations which is talking about. We are trying to find out ways in which this could be done. So in future, I think with these types of technological innovations, we will be able to achieve financial inclusion, and we will be able to have a socio-economic justice in the societies in which we are living. With this, I conclude my presentation. Thank you very much. Assalamu alaikum.
Wa alaikum salam wa rahmatullahi wa barakatuh. I hope I'm audible. Thank you so much, Professor Aisha Muniza, for this very comprehensive presentation on the topic. You have really touched wider dimensions of the fintech. Thank you so much for that. You have also deliberated several questions that might arise in this subject and shared with us your views. We appreciate all that approach and way of looking into this subject. Now, participants, before we take a lunch break, let me invite you for questions or comments on what Professor has said. But if you can allow me to begin with one, as you also prepare to raise up your hand for your questions. Prof, one of the issue in the tech space is the cost of tech, cost aspect of it. And it is not the cost of technology itself, but also the human cost, the fear that jobs might be lost and so on. How do you respond to these concerns?
Thank you very much, Khalfan, for that interesting question. Of course, whenever we have a change, the first thing will be the fear, right? So the same thing has happened in our Islamic finance industry and in general in the finance industry as well. So what I believe is that with every change, there will be more different types of opportunities created as well. For instance, look at ChatGPT, right? When ChatGPT came into the picture, we all thought that then there will be no need for people to go to school, or even in financial institutions, we will need less resources to do research function and things like that. But see how things have evolved now. We need people who can train ChatGPT and who can utilize ChatGPT functions to conveniently deliver the output. So instead of people becoming redundant, we thought the research offices will become redundant, but they didn't become redundant. We just need to provide them additional We just need to upskill them and provide them the opportunity to serve in a better manner through the technological innovations we have in the market. So what I believe is that the fear will be there, but by the time we experience the technological innovation, we will understand where what will become redundant and how to create an opportunity for the people using it. So I think it's a myth that suddenly human will become redundant because of AI, for instance. So that's my answer. I hope you got the answer, Khalfan. Thank you very much.
Thank you for that. Back to you, participants, if there is anyone
I think
wants
two
to ask.
or three comments are there. Thank you. Thank you very much, Asha, for the comment. Digital lending in Islamic finance where customer gets cash real time. What's your view? Is it from Sharia compliant perspective? So as long as we follow the Sharia parameters, there's no reason why we can't have it, because we are able to do the evaluation of the customers within a second or a minute, and then we are able to provide the financing needs required for the customer. Even in commercial financing, we are having the same. Using commodity murabaha earlier, we used to go to the bank and get the physically we have to be present and to initiate the transaction. But now, using the digital platforms, we are able to do the same. So I believe that as long as the black and white parameters of the products that we are using is followed from a Sharia perspective, whether we are using a digitalized platform or not, it should be fine. So in digital lending, we have to adhere to the rules of qarud. If we are using the concept of qarud, if we are using another concept such as commodity murabaha, then we have to follow the principles of tabarruk and ensure that it is Sharia compliant. Himad, I hope that I have answered your question.
Okay, any other question? You can post it, or you can unmute and ask directly. As people think about what maybe to write or ask, my second question will be on the talent building or human resource building to drive Islamic fintech. Is a new field, as to what I understand, in the East and the West. Courses are emerging to provide or to build the capacity to the young in fintech courses, be Islamic or general. How do you see the Islamic finance stakeholders position ourselves in making sure we also build the capacity on this trend of fintech, Islamic fintech, and so on and so forth? Yeah.
So obviously, right now we don't have any, because we don't know where we are going and we don't know what we will have in future, right? So I think a proactive role in this regard needs to be played by the professional institutions as well as the regulatory authorities affiliated institutions and the academic institutions as well. So collaboration with the industry players are needed to come up with the required knowledge or to fill the talent gap we are having right now in the industry. I would say that without having collaborations between the universities, industry players, and the regulatory authorities, it will be very difficult for us to come up with the right syllabus and build the right talent required for the industry. So the answer for that would be, we need to work in collaboration, and we need to understand that whatever is being taught right now could be redundant in future, and therefore our syllabus updating, our curriculum updating is very much required in this.
Okay. I think there is no further question from the audience. In as much as I have so few others, but given the time has gone, and understanding that we have a huge time difference between us and where you are, I will not ask further. So thank you so much for your time, valuable insights. We appreciate and look forward to welcome you in future to share with us more in varieties of subjects on Islamic finance. Thank you so much, and we wish you a good, is it night over there?
Not yet, it is 5:50 in the evening.
All right, a good evening. Thank you so much, Prof.
Thank you very much for the opportunity, and I hope you got some benefit out of the presentation. And please have a good lunch.
Thank you so much. It was really insightful. Dear participants, as per our schedule, now it is a prayer and lunch time. So we are going to take a break and then come back exactly at 2 to proceed with the rest of the program. So looking forward for you to join in large numbers so that we can benefit from the rest of the speakers. Feel free to share the link with your trusted friends whom you think can benefit. I know maybe some people delayed to register by the time we closed it. We can allow you to share our Zoom link to your colleagues and friends to benefit out of this session. Second, the slides of our speakers, some of them we have, some of them will collect them and advise where to get them. Most likely they will be uploaded in our website, but keep in touch on our website to find updates on that aspect of presentations. That being said, we are grateful for all of you who have made time to be here up to this hour. Please let us join in large numbers at 2 to proceed with the rest of the speakers. So see you at 2, inshallah ta'ala. And I wish you a healthy lunch, and remember us in your prayers as we do a dhuhr time shortly. Looking forward to see you once again. Bye-bye for now.